If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
All right, everybody. Good morning. Welcome back to another live stream. I hope you're doing well and ready for another day of trading. Markets are on the move already. We've got a little bit of a bounce back in the indices this morning. And I want to ask really quick in the audience, we'll give everybody just a minute to join in as the show kicks off. Countdown to PPI this morning, the producer price index will move markets. Let me ask you guys a question. Which of these do you trade? Now, which one of these, Forex, indices, commodities, stocks, crypto, which one of these things do you trade the most? Now, I know some of you guys, if you're like me, I trade all of these things except crypto, except for Bitcoin sometimes. I trade stocks, I trade commodities, indices, Forex. But if I had to choose one, if I was back against the wall, I only trade one, it would probably be indices. Second place for me would be commodities. Third place would be stocks. Fourth place would be Forex. Not to say that any of them is not valid, right? There's great ways to trade all these things, but I'm just curious what people in the audience trade the most. Do you trade commodities like gold, oil, silver? Do you trade indices? Do you trade Forex, currency pairs, stocks, crypto? What's the main thing you trade? And when I say I don't trade crypto, it's kind of tongue in cheek because I do trade Bitcoin sometimes, but I just don't, I wouldn't say that like in terms of a relative to amounts of time that I spend looking at indices, Forex, commodities, cryptos is just very little. Mainly stocks, indices, crypto, gold, Forex, stocks and commodities, indices, Forex and indices, Forex. Yeah, there's, Forex, what I've found in my years of doing this is that outside of the US, Forex is a lot more popular than in the US. And globally, a lot of people really love trading currencies. In the US, I found these to be the most popular. And in the US, young people, crypto's like super popular. Just interesting. There's none of, sometimes people ask, well, which one's the best one to trade? Which one's the easiest one to trade? And the answer is there is no easiest one to trade. They're all hard. None of these are easy to trade. They are all hard. Forex. What's wrong with Forex? Well, it's a market that goes sideways for the most part for most currencies over the long term, which can be difficult to find sustainable, reliable, strong, multi-year trends. Indices, what's the hard part about indices? Well, they grind higher, which is great if you're long, but if you're long at the wrong time, it's like musical chairs and you get smoked, right? Same thing with crypto. Crypto's just insanity in both directions. It's insane on the way up. It's insane on the way down. Stocks, believe it or not, stock picking is actually very, very difficult if you're trying to pick stocks because most stocks, they have their day in the sun, right? Most stocks have their day in the sun and then they just kind of fade into oblivion, right? There's so many stocks throughout my history of trading and investing that I've watched go from darlings. Everybody's talking about them. I could list off a bunch. Well, here's a quick example: Tilray, right? Anybody ever heard or traded Tilray? If you haven't, then you probably just haven't been trading or investing very long. But there was this period in 2021, 2022 where pot stocks, MJ stocks, were absolutely so exciting to the market, right? People were making the bet that the Biden administration was going to legalize it across all over the states, and there was going to be some giant. Does anybody remember that on Instagram? It was huge. You had the Dan Bilzerian era, right? You had all these different excitement around those types of stocks. And then it pretty much faded into nothing. If you had bought that stock in 2018, I mean, can you imagine the guy who bought this? They lost 100% of their value pretty much. So this happens to a lot of stocks. A lot of stocks are very, very hot for a period of time, and then they fade into oblivion. Here's a stock that used to be a beast of a stock, Intel Corporation. This used to be a monster stock, and it was a multi-decade monster stock that is now turned into a total loser stock. Stock's down years from its highs, down 60+%. So that is the difficulty of stocks, is that if you catch the right stock, yes, you can do phenomenal. If you are in Nvidia, or for example Robinhood, if you're in those hot names when they're hot, there's nothing that beats stocks and crypto, right? When crypto or stocks are hot and you are on the right side of it. I mean, people think gold is volatile. Keep an eye on hot stocks and hot cryptocurrencies when they're moving. There's no more volatility you're going to find in markets than altcoins and high flyer stocks. So again, the thing about trading though is that all of these things, well, and what's the pros and cons of crypto? If you're right about crypto, you make a bunch of money. If you're wrong about crypto, you lose all your money. That's it. So it's very hard to play crypto slow and steady, because at any given moment you are gambling. Let me take it back. You're not gambling. Even if you make an educated guess that you think Bitcoin is going up, at any moment, even the most quote unquote reliable cryptocurrency, Bitcoin, is subject to drop to zero, right? It could happen. Maybe not to zero, but Bitcoin could drop by 90%. It's done that many times through its history. So when you start analyzing it, really what we just did is we discussed the volatility and drift of each of these markets. Forex is very low volatility, low drift. People who think Forex is volatile, the only reason it's volatile is because you're applying a ton of leverage to it, which is why swaps and things like that can be very expensive, for example. Forex is not a market that moves very much. Indices, but again, you can make a lot of money in Forex by applying leverage to it. You can also lose a ton of money applying leverage in Forex. Indices, right? Pros and cons of indices. Well, if you're talking about indices, they're my favorite thing to trade because they suit my trading style and my understanding of fundamental analysis very well. It's also very US centric, and my kind of focus in terms of what I do is very focused on US economic data. So indices, commodities I really like too. They typically have a upward drift over the very long term. Does not mean they go up every day, but gold tends to go up over the long term. And at the same time, commodities have in some ways, I would say, comparable volatility to indices. So yeah, this fits my wheelhouse the best. I also do trade a lot of options on stocks specifically. In crypto, I don't do a whole lot. Forex I like as sort of a diversifier to what I do. I trade Forex mostly because it adds some uncorrelated returns to what I do in the markets. Anyways, let's move on to some markets here. Take a look at what's happening today. You've got the Russell 2000 index down yesterday about 1.5% or so. I'm still in the trade. We're sitting at support. If we break lower today, I'm going to take profits on this trade. And if we can push off of these lows, then I'll be back to square one, which is looking for a break through these highs in order to trail stops. I've been in this Russell trade for, at this point, 54 days, which is a long trade for me. But for me, long trades are good trades because they typically mean I'm trailing stops and the trade's just going and going and going. Nick, how did you learn about macroeconomics? So I have been trading for, I started looking at financial markets 2016, 2015. I say that loosely because it was more like 2017 where I really started like paying attention to stuff. But yeah. But anyways, when it comes to the Russell trade, my plan here is to continue to trail stops and see if I can get a bigger push to the upside. If it happens, I'll trail stops further. If you get that kind of move, if we were to see another bump up in stocks, I would trail stops higher. If it breaks lower today, I will take profits on the move. But typically the trades that are the best trades that I have are usually long in duration because I keep trailing it and it just keeps going, right? So I never know how long a trade is going to be. Losing trades for me typically on indices, commodities are very quick if I'm wrong and very long if I'm right. I'm still in the gold trade as well. Gold has been pretty sleepy here recently, waiting to see if we can get a break one way or the other. We've got PPI coming out in just a minute and a half or so here. We'll see if that does anything. Yesterday we had CPI, which came in mostly in line with expectations, but core CPI was a little bit soft. So yeah, we'll see if we get anything out of the producer price index. I'm going to pull up FX Street so it will give me the year-over-year number for this. So if I go economic calendar, I just want to pull up the producer price index. Here it is. So we're looking at the year-over-year producer price index. We'll see what we get here in just a few minutes, or I'm sorry, just a few seconds. Let's just go here. Yep, we got about 30 seconds to go. I'm going to switch over so we can take a look at everything at the same time. You've got S&P here, or indices over here, dollar, gold, Bitcoin. We've got our breaking news coming in just after this. Dollar is pushing higher into this. We'll see what it looks like in just a second. PPI numbers should drop any second now. Initial reaction on the indices, slightly higher here. Dollar index, a little bit soft on the release. Gold, pretty much flat. Bitcoin, flat. Oil prices down today. Let's see what the numbers were. Okay, so we had 2.6%. Very interesting. So we had the producer price index excluding food and energy year over year. That's the core number, came in at 2.6% compared to a 2.7% read. The month-to-month reading was softer than expected. The year-over-year number was softer than expected. Cooler inflation than expected. That's the summary from producer price index, and considering the consumer price index yesterday, the core number came in soft. Then that is overall going to kind of suggest that inflation is continuing to cool. It may not be cooling substantially faster than people had expected, but I think the big thing for the market itself was, are tariffs going to cause this big bump up in inflation? We just have not really seen that. And with today's number releasing, that's more evidence of soft inflation. 2.3% versus expected 2.5%. That's a soft year-over-year reading for the producer price index to complement yesterday's inflation print from the CPI, which was mixed. I think this leans us in the direction of inflation this week when looking at 2 out of our 3 big ones, the 3 big inflation reads being PCE numbers, which we have not yet gotten, CPI numbers, and PPI numbers. I would say that after today's PPI number, this leans us in the direction of rate cuts still on par for September. Now, had you gotten a very, very soft CPI yesterday too, then I think you'd probably be potentially seeing a greater probability, not a strong one, but a greater probability that perhaps the July meeting coming up, we could see a rate cut. But with yesterday's CPI number, like, we didn't see a huge drop in inflation. But with today's producer price index numbers to kind of balance things to the downside in terms of inflation, or tilt things to the downside in terms of the overall look, that's, I think, why you're seeing a drop in the 10-year yield, suggesting that, again, inflation seems to be cooling in line with expectations mostly, and that's a good thing. I think that's also why the stock market, take a look at the Russell, pushing up 1% now today. Very nice. I'm very long the Russell, so I'll take that any day. Cooling inflation is excellent for stocks, right? The stock market wants to see employment stay steady and inflation come down. A Goldilocks environment, if you will. That's always what stocks want. So does crypto, right? Crypto is the coddled baby. It wants the perfect scenario. At least historically, that tends to be the environment where Bitcoin and Ethereum and all those things typically do well, is when the environment is very hospitable, right? So today we've got cooling inflation evidence, which, how does this impact gold? Bullish, but not screamingly bullish. What would be screamingly bullish would be some sort of geopolitical tension, or if the jobs number was terrible and we had, really cooling inflation so the Fed can cut rates aggressively. That would be the bullish scenario for gold. Gold, to me right now, you're talking about an environment that's kind of gone sideways. You got a range-bound market here. You had a cooler inflation print. That's exciting for gold, but you had a hot job or a strong jobs number. That's not so exciting for gold. Strong jobs promote security in the economy. Security is not particularly bullish for gold. Security plus cooling inflation, great for stocks. Stocks love that, right? Because you're talking about a good, hospitable environment. If you were to tell me we're going to get rate cuts plus a hospitable environment, the trade would not be gold. The trade would be stocks. If you were to tell me rate cuts plus recession, the story is gold, right? So you want to pay attention to understanding this is not what we've got. We don't have, and this is why, I do have a long position on gold, but it's a really small one, and it's sort of a geopolitical hedge in my portfolio. My long on gold is not a huge conviction trade for me. Maybe it ends up ripping through highs on some sort of blowout in the Middle East again. Let's hope not. But in terms of where am I with gold? Gold is not super attractive to me, because if it was what would make it super attractive would be we had a bad jobs print, PMIs are downside surprising, everything's looking rough, right? But that's not the environment that we're in. So if I come in here and I pull up, if you want to talk about gold, if you want to say, is gold bullish? We would need dollar weakness. Keep this very simple. If you don't have the EdgeFinder, just watch this for a second, and you should consider getting a copy, because this tool alone is worth it. The US economic heat map takes a look at all the stuff that we regularly talk about on these streams of videos. For example, the consumer price index that came in yesterday, the producer price index will update shortly, PCE numbers, which I just mentioned, unemployment rate, jobless claims, job openings. Think of this as your pulse check to the US economy at the high level view that the Fed typically looks at. These are the metrics that they often cite. That's why we built this list. This tool looks at all these data points. It shows you, by the way, the latest dated available data that we have in the tool. And most importantly, is the tool will show you the actual data versus the forecast data and giving you a surprise metric here. Then it will also tell you how that surprise, if at all, if there was a surprise, how it impacts our calculus on the US dollar or the stock market. Now, if you're thinking about gold, just reverse this impact. So let's think about this. If we're looking at gold, remember what I just said, we would need a bad jobs print to get us really bullish on gold here. NFP came in really solid, 37,000 jobs ahead of expectations, right? The market expected 110K jobs. We got 147,000 jobs. Unemployment rate ticked lower to 4.1%. It went down. Market participants thought the unemployment rate in the United States was going to go up. It actually went down pretty substantially. So if you're like, oh, I'm super bullish on gold, it's going to go higher, ask yourself, fundamental analysis wise, does the data currently support that? In my opinion, based on our calculations here, would be no. It doesn't support outright huge bullishness because the economy is not flaring huge signs of a recession at this time. Labor data has come in pretty dang strong here recently for the US dollar. Now, I'm not saying that the US dollar is also, the most bullish thing either. Our impact is sort of mixed 50-50. We're at a 58% of our indicators suggesting bullishness for the US dollar. So if you are talking about, is gold super bullish at this time? I would say not really, but then you'd say, well, Nick, you have a long position on. Yes, but it's sort of a hedge. The reason I say that is because I'm very long stocks and indices at this time, based on what I just got done discussing with you, right? I think we have cooling inflation and hot jobs print. The obvious trade for me right now is indices. Long stocks, long indices. That's a trade that I'm in. It's a trade that I'm trailing stops on. I have a basket of stocks that I own. I'm long the Russell 2000. This is the most obvious trade for me right now. And when it comes to trading, I'm not a genius. I just go for the obvious trades. We use fundamental analysis because that's the wind in our sail. And we look for the obvious trades. It doesn't take a genius to recognize, okay, jobs strong, inflation cool, that's good for stocks. Is it good for gold? It's okay for gold. It's not excellent for gold. So is gold the obvious trade? No. Stocks and indices have been the obvious trade for the last few weeks, last few months. You've got nice price action breakouts, strong upward trend, support holding here. Don't overcomplicate it. The EdgeFinder is meant to help keep some guardrails on what we're doing. Right? So NASDAQ still getting a bullish rating. The commitment of traders data, we can also track institutions to see what they're up to. We did see some accumulation of NASDAQ last week. They added significant long contracts, decreased shorts. That was a very bullish week for the NASDAQ. So for me, I said this yesterday, but if I wasn't in any trades on the indices, the trade that I'd be looking for personally would be a retest on the NASDAQ. 22,000 looks really attractive. And that might mean waiting for a minute because there's that's a ways away. But that would be the only trade that I can see set up. So even though I'm bullish the indices, let me add on something to that. I'm bullish on the indices fundamentally. Technically, I think it's a little bit stretched. So the prime real estate setup for me right now, the quote unquote easy trade, does not mean it's a guarantee to work. But to me, the easy trade right now is stocks look good on a pullback. That is it. So if I get this move, I'm looking for trades. If I don't get that move, there's no trade. Right? Does that make sense? I hope that, because people they come in the show all the time. There's people like, what about gold? I only trade gold. Sometimes you shouldn't force trades in something that's just range bound. Like I caught this pullback to this upward trend, but it's a small trade for me. And I mentioned this earlier, but it's a little bit of a geopolitical risk hedge in my overall portfolio. And when I look at a whole portfolio holistic view right now, I'm very long stocks and indices. So I want something in my account that helps to hedge that. So to get more expansive on that, I have a long position on gold and I'm selling covered calls against a lot of the stocks that I own in my portfolio. So there's some hedging that I'm doing just to protect from possibly, if I'm wrong, if indices have, something completely game changer happen, Russia goes heavy on Ukraine or China enters Taiwan, something terrible happens, right? Let's hope it doesn't, but I want to have some levers I can pull in my portfolio, calls that I've sold, gold long positions, in case that occurs. I'm a big fan of taking a holistic view of your portfolio and doing, making decisions that are not just, look, I'm not really a day trader. I'm much more of a swing trader and position trader. So I do want to have, if I'm going to be holding index long positions like the Russell for weeks on end, I do also want to protect myself in the case that something turns around. I hope that makes sense. How are you able to trade CFDs in the US? I do not trade CFDs. I trade ETFs primarily. You can also trade futures in the US. So I don't trade CFDs. I do analyze CFDs because they're the most recognizable to the broadest audience here. And I like the ability to do indices analysis in a way that the vast majority of the audience can understand what we're looking at. Because a lot of people here don't trade futures. So if I pull up an NQ chart, that might alienate a lot of people's view of the charts. Anyways, we also have gold. Like I said, I'm in a long position on gold. Goal for me would be a break through these highs in order to trail a stop further in. That's sort of next steps for me on this gold trade, but it's super, super choppy. So what should we expect now that PPI came in like this? I just got done explaining my bias overall based on the economic data. To me, this is going to suggest it's going to, once PPI updates here, this is going to be bullish for stocks. It's going to be bearish for dollar. So dollar is going to be mixed. Stocks are going to be slightly more positive here once this updates. It's on a timer, so it will update, pull the data shortly and be updated inside of your portals if you have the EdgeFinder. If you don't have the EdgeFinder, now's your best chance of the year to get it. It's currently 45% off. If you want some information about how you can get access to our tools and start trading with the fundamentals, pick it up at the lowest price that we offer all year long. We're offering 45% off the EdgeFinder to those who send us a direct message while this stream is happening right now. We'll drop that link here in the chat, and you can speak directly to our support team about getting yourself set up with a copy of the EdgeFinder. A couple things about it. It's a one-time payment to get access to the EdgeFinder, so it's not a subscription. It is also, there is the option if you are somebody who's like, I've seen the prices, it's slightly outside of my budget at this time, send us a direct message anyways, and just let us know that you can't pay for the full thing today, but you'd be interested in the payment plan, and they can give you some information about the payment plans that we currently offer. So we can actually split up the payment into two if that's easier for you. But our support team can help you out with getting set up. Behind the scenes, we have a software team. We have a support team that helps traders all over the world with the tools. So if you're looking to take your fundamental analysis to the next level, that is what we do. A1 Trading is a software company in the trading space, specifically building a lot of the stuff that I think more traders should be using, but there's not a lot of accessibility to this stuff for retail traders. So in our view, we're filling a gap that is much needed in the trading space. Everyone looks at technical patterns. Everyone looks at, RSI and trend lines and support and resistance. Everybody has the ability to do that. But it's very hard to find tools that isolate and centralize the fundamental analysis, which ultimately is what moves the market anyways. It's kind of incredible that you know, everybody is so fascinated with looking at like a technical chart, which I get it. It's useful to use technical analysis, but it's also very useful to spot what made volatility go crazy or volatility dry up. What's making the Russell continuously push higher? What's making the Fed decide to cut rates or not cut rates or hike rates? Understanding these inputs and having the tool sets to actually determine why they're doing what they're doing and why the markets are moving the way they're doing is super powerful. So, like I said, that's what we do. We build tools. I have a background in software engineering and, of course, trading. And so I've kind of mashed the two into building the tool sets that I think traders really should use. Euro dollar continues to pull back here. Down a good bit here from the highs, but in terms of euro dollar, let me think about this a little bit more. Euro dollar may actually be... So, by the way, also for EdgeFinder super fans, we did implement PCE and PPI into the scoring, which I am thrilled about. Prior to a couple weeks back, we didn't have this in the scoring just yet. We had only CPI being considered. Now you do have, if you have the EdgeFinder inside of your top setups indicator, you can see that we have added more inflation data. Look, inflation is really important. It's really, really important to determining what the direction of the Fed wants to do next or other central banks want to do next. So we've implemented this into our scoring calculus. Help me to get it. KJ, send us a message. If we could drop that link one more time. KJ and anybody else, if you are interested in getting the EdgeFinder, you can't afford it today in full, just DM us. Let us know if you're interested in a payment plan to make it more accessible to you. We do make that an option for people who are like, I don't want to miss the sale, but can I split it into 2 or 3 payments? Just send us a DM. This link right here will allow you to connect with someone on my support staff who can get you set up with that. Nick, would you be looking to re-enter your DAX trade? Xavier, that's a good question. DAX is bullish on the EdgeFinder still, so am I feeling a little bit of FOMO and feeling a little silly for getting out of my DAX trade? Yeah. But let's see what happens. If we can get a pullback in the DAX, I may look to get back into that trade. So if I go DAX, if I'm taking a look at the German 40 here, if we get a pullback in the DAX, I may look to get back into the trade. I'm not in a hurry necessarily, like I'm not going to go buy it today. But if we were to get a pullback into this 23,200 level, which is where I bought it previously, by the way, I bought it at this level. And then, I almost got my stop hit, and then the price was able to reverse higher, pushed higher. I trailed my stop and I got taken out, I think yesterday or the day before. No, it was the day before. So 2 days ago, I got trailed out, took profits on this move. And so now I'm looking at, the possibility of re-entering the trade if we get a push down to, let's call it 23,400 on German 40, the DAX. So we'll see. Nick, how does the scoring count work in EdgeFinder, and do you provide training on EdgeFinder? You two have really great questions, and I've got something for you. So if I go a1trading.com, this is our website, so you can explore all the different tools that we build if you go to a1trading.com. Additionally, if you go under here, EdgeFinder tutorials, you can read through an extensive library of all the different tools that we've built over the years now and how we score them. So it's not a black box, magic system. It is a cold, hard look at the data that moves the market. And as far as I'm concerned, I might be a little bit biased, but I think it's the best product on the market with the most approachability to the most traders that are looking to implement fundamental analysis into their trading. Yesterday, I joked your alternative would be if you want to go get the Bloomberg terminal, you could do that, but it's $2,000 a month. which is really expensive. So instead, we offer one-time payments to get access. And like I said, to me, it's an approachable tool for people looking to implement fundamental analysis into their trading. If you have further questions and would like to speak to someone on our team, just because there's only one of me and there's many of you guys, if you have more questions and want to know more about the tool, like I said, go to our website, a1trading.com, and you can explore there. Or if you'd prefer to speak to someone who has answers for you, that link that I shared earlier, you can chat with us on our website, a1trading.com. You can click the chat button in the bottom right, and you'll be connected to a member of our support team who can help you with the tool. That way I can keep it moving here. We also have, I believe we have, let me check our schedule here today. We have James coming on in just a little bit. So we'll count down to that. I've got 8:15 to 9 here. James or Chandler, let me know if it's 9:15 or 9 that I'm passing things off to James here. Either way is good with me. Okay, so the only thing is maybe we should do 9:15 so that he doesn't have to go for over an hour to get to Chris. Anyways, if you're late to stream today, all good. Here's a recap. Producer price index numbers came in real soft. This complemented well with yesterday's inflation report, the CPI report, which came in kind of mixed. Today gives us a solid footing to say, okay, inflation's actually continuing to cool because the producer price index number came in soft on both core and headline. What's up, Alan? Good to see you, man. Good morning. I came in I feel like I came in real heavy on the stream today with tasks. There was so many things I needed to get through. So now now I feel like I've gotten through a lot of markets. So let's see what else is interesting today. Euro dollar, like I said, so on the currency side of things, pound dollar, this was a bearish setup. And so let me think about this really quick. So how is on the EcoScore PPI going to impact pound dollar? Well, let's go look at the top setups. And once this updates under, let's take a look and see what pound dollar is. Pound dollar was a bearish reading. It still is. The producer price index year over year with pound dollar. Bearish here for the pound, suggesting, well, once that updates with the US PPI numbers, I think this is going to go neutral. Or actually, what was the latest PPI numbers for the UK? We can take a look at that. If I go UK producer price index numbers year over year, we had higher than expected producer price index numbers, which is bullish for the pound. So this will actually turn into a bullish category for pound and softer for US dollar. So that will make me a little less interested in shorting the pound dollar, at least for now. Here's a look at the economic surprise meter across all major currencies. Euro still getting some strong favoritism here. NZD is getting 100% of the indicators, suggesting stats came in higher or stronger for the currency than expected. That's really interesting, especially when you compare it with like CAD or Australia. So let's look at that NZD heat map for a second. If we look at the New Zealand dollar, wow, that is a very strong reading here. So what is this telling us? What are we looking at? The New Zealand economic heat map looks at a collection of economic metrics like it does for all the other currencies. And what we see here is that all 1, 2, 3, 4, 5, 6, 7, 8 of our indicators here, all 8 of our economic metrics came in a way that suggested a stronger currency. This is a great example to go through really quick. GDP growth was expected to come in at 0.7% growth. It came in at 0.8%. That's bullish for the New Zealand dollar. Manufacturing PMIs rose to 48.8. It's bullish for the New Zealand dollar. Services PMIs rose to 47.3 from 44.1. It's bullish for the New Zealand dollar. Retail sales were expected to be flat. They came in stronger than that. Bullish for the New Zealand dollar. The CPI report came in higher than expected. Bullish for the New Zealand dollar. PPI came in strong also. Unemployment rate ticked lower. That's bullish for the New Zealand dollar. And employment change strengthened. Bullish for New Zealand dollar. Crazy. Very crazy. US 30, Nick, please. Just passed a 25K phase 2 account. Good for you, Tom. Congratulations, man. I'll take a look at the down just a second. Good for you. That's awesome. Love to see that. Okay, so anyone here heard good or bad experience of the EdgeFinder? Should I buy it? Usama, you can read reviews on our Trustpilot. And if people here have used the EdgeFinder, I would greatly appreciate if you could share your honest feedback. Look, there's people who love the EdgeFinder. There's people who are not as big fans. With every product, you're going to get people who don't necessarily love every aspect of it. But I can honestly say the EdgeFinder is the response in terms of our customer base has been overwhelmingly positive. I appreciate you guys. 100% worth the money. Look, it's not a holy grail. And I think that's why we don't set expectations for the EdgeFinder to be this holy grail, money-making genius robot that's going to make you, like, that's not what we do. The question that I would ask for you, and this is how you can determine if you want to buy the EdgeFinder or not, do you want to implement fundamental analysis and sentiment analysis at a higher level into your trading? Do you see the value in doing that? If the answer is yes, the next question you should ask is, does the EdgeFinder help me to better source statistics about what's happening in the economies around the world or the market sentiment, right? For example, looking at the commitment of traders data or looking at the put to call ratio to look at what options market is expecting in terms of a move, right? So retail sentiment, if I want to look at crowd sentiment on currencies that I'm watching or commodities or anything of that nature. So instead of, hey, is the EdgeFinder worth the money? Look, it's not a cheap tool. It's an investment. Don't buy it if you don't see the value. What I would encourage you to do is go through that checklist I just asked you. Do you seriously want to implement sentiment and fundamental analysis into what you're doing? If the answer is yes, do you see how the tool that we've built here has helped to automate so much of the data collection and the filtration system, the scoring system has helped so many traders and investors who are looking at this stuff to better source all this stuff? Does the EdgeFinder help to solve that problem for me? Yes? Okay. Final question is, can I afford it? Seriously ask yourself, if it's not something that you can afford, then maybe it's time to pass on the EdgeFinder for a little bit. However, I will say this, I said this earlier, it's 45% off, and we do offer flexible payment plans to make it more accessible to people who can't afford a full thing today. So again, send us a DM on our website, or we'll drop the link here in the chat. Take advantage of the low pricing and split it up into a payment plan if you need to. If you see the value, you should buy the tool. If you do not see the value, please do not buy the tool. We don't want negative experiences. And so what we do is we do our very best to set realistic expectations of what the EdgeFinder can and cannot do. It's not going to make you a magically profitable trader overnight. It is, however, again, I think very strongly it's going to help you source economic data, fundamental analysis, sentiment data, commitment of traders data, retail positioning. There's no question. It improves the accessibility of those data points, which is why we have so many, people who love the tool. Shout out to everybody all the EdgeFinder lovers in the chat. I greatly appreciate it. I truly, do not want people to buy the product unless they are on the same wavelength as what we discuss here in the streams. It's obviously we want to make money and sell the product, but it means more to me when I see people who are like, they buy it and they actually get the value it was intended to offer to you, not expecting to be a millionaire next week. That's not who we want to sell to. And to be completely candid, on the sales and marketing side, those are the worst people to deal with, to be completely honest. People who want some sort of magic indicator are very difficult people to work with. We prefer experienced traders who are looking for tools to improve their already existing, understanding of markets. Does EdgeFinder track interest rates? Yes. Let's look at it. EdgeFinder tracks interest rates, but it does one better than that. I'll show you. So it shows you interest rates. You can of course pull up interest rates for all the different currencies, but more important, check this tool out. This is a new one. Interest rate projections. One of my favorite tools in terms of interest rates is to look ahead and say, here's our major currencies. By the way, you can add all of these. We have interest rate projections for India, we have China, we have Switzerland, Canada, Australia. We could look at these and we can say, here is where interest rate projections are expected to go in the future. We need to increase the size of this text slightly, but let me just show you. So Q3, interest rates in the US are expected to come down to 4.3. The UK expected to go down to 4%. Europe's expected to go to 2.2 or stay at 2.2. Japan is expected to go to 0.8. They're actually, there's a forecast of a rate hike for Japan. So yes. Does EdgeFinder have a Black Friday sale? Yes, Alex, but let me be completely transparent with you. The price that we're offering on the EdgeFinder right now is the exact same as our Black Friday sale that we did last year. And this year, there is the possibility that between now and Black Friday, the price of the tool goes up. So I can tell you, you're not going to get a lower offer price right now in terms of the sale event that we're running the entire rest of the year. It's not going to go lower than this. 45% off is the biggest discount that we do. And we're offering to split up the payment plans for a limited time if you send us a DM. So yeah, I mean, interest rate projections are huge. Understanding, and by the way, if you're a currency trader, check this out. This is kind of cool. So if I want to look at just Europe and I want to compare it to Canada, right? I have a trade in the EuroCAD. If I'm looking at Canadian interest rates are expected to actually come down by the, let's go end of year. By Q4 2025, Canada's expecting to cut their interest rate to 2.5% from where it is currently. Europe is also expected to cut interest rates. So what's interesting though is, and I've seen this across trading YouTube, if we look at places like, for example, the US versus Japan, I find this to be very interesting. Actually, let's look at, let's do this. So Japan is in red, blue is US. The US is expected to cut interest rates. Interestingly, Japan is expected to hike rates. So this could perhaps suggest that over the longer term, there could be the possibility of a little bit of yen strength related to the US dollar. And I think that's part of the reason why you've seen, yes, dollar yen is moving higher here recently, but bigger picture, we've seen kind of a reset. And I do think that there's a possibility that as this thing gets stretched, dollar yen actually may be due for some downside based on what we just discussed. Thanks to the producers. Yes, we have tutorial videos on our YouTube channels and websites. There's a full course on our I've got a EdgeFinder explained course here. Just drop the link in the chat if you want to go through all the different videos. Again, if you are considering EdgeFinder, consider it today. Don't wait because you're going to miss the sale. It's 45% off right now. For information, send us a DM. If we could drop the chat one more time, or the link to the talk to one more time. If you have any questions, if you are interested, if you want to explore it, You don't necessarily have to buy it with us, but at least send us a direct message and you'll be connected to our support team who can answer you a lot better than I can on the live stream. So just open up a DM with us here and you'll be connected to a real person on our staff. I love how passionate people, Nick gets when somebody asks about the EdgeFinder. The EdgeFinder is our baby here at A1. It is, to me, the EdgeFinder is everything. Like, in terms of, it is my expression of, or not really mine. It's the thing is, the EdgeFinder is not built on Trader Nick. The EdgeFinder is built on what our community has called for in terms of what people want to see. People want to see the commitment of Traders Day. This is not Trader Nick stuff. But why I take so much ownership to it is because I'm kind of the bridge between what people want to see and what our development team actually builds. And so that's why I take a lot of pride in when people say, I love this feature, I listen to that. And our dev team also, gets feedback from surveys and things like that. And then when people say they're not so interested in certain topics, then we also relay that into, that. Built for Nick, by Nick, for all the Nicks. Sean, you're funny. Yeah. So anyways, with the interest rate forecast that we just got done discussing, something like dollar yen, to me, would have limited upside for now. So if I'm looking at dollar yen, I would be more likely, if the further dollar yen moves higher, the more I would be more on the short side than on dollar yen. Except dollar yen currently doesn't have a strong reading on the EdgeFinder, to my understanding. Yeah, so we don't have a signal at this time from the EdgeFinder in terms of dollar yen. It's very neutral, but I would keep an eye on it. So if we get a bearish reading on dollar yen and we're tagging into resistance, it's probably going to be a trade for me. Nick, can you make a video on your stock channel on how to read financial statements? Absolutely. I'm hoping to get to that back half of 2025 here this year, is to really deep dive into the stock box, which is our other product specifically for stocks. Trust me, we're waiting to finish up some tools. And then once I have those tools to show more financial data, I will definitely be making more stock box videos. NASDAQ is staying positive here, but not a huge move. I think, to be fair, if you're looking at indices, the expectation for indices is already very high. They're at all-time highs or close to it. The expectation of rate cuts is already there. You have stock earnings coming in. Actually, did we get? Yesterday we had like JP Morgan, which had good earnings. Stock kind of traded sideways. Citigroup was up yesterday. It's another big bank in the U.S. Traded higher. It's just a quick look here at stocks. And in just a few minutes, we have James taking over the show. So I'm going to try and time this well. Anyways, yesterday we had NVIDIA absolutely skyrocketing. I did a video on NVIDIA yesterday on my stocks channel, just discussing this opening back up of Chinese sales for NVIDIA is a huge deal. It's very bullish for the stock. Another one is AMD. AMD absolutely ripped yesterday, up 6%. Stock flew yesterday. This stock has been on fire. Semiconductors in general have been doing really, really strong here. The bounce back has been real for those stocks. So yeah. DAX trade, someone asked me if I'd get back into it, possibly if we got this pullback here. Russell trade, I'm looking for a break through the highs to trail stops further. VIX down 3% today. Man, volatility is just so... And this has been the frustrating part of trading here recently. Some of you guys might feel the same way, but when the VIX gets really, really low, it can be kind of... it can be frustrating because it's like everything kind of doesn't move very much. Like I took a trade yesterday on EuroCAD. This is a new long position for me. EuroCAD, and it's like, I'm not in a hurry per se, but it can be frustrating when you're like, okay, You're in trades or you're waiting for trades and just things just are not moving. Euro dollar got I mean, this is just, it's just not, look at the difference in volatility over here versus where we really have dried up recently. Pound dollar's moving with a little bit of volatility. Dollar yen's moving with some of the currency pairs are moving, but it's been a little bit dry, especially if you're someone who trades gold. Oh my goodness. Gold has just been, if I look at my average true range on gold, here it is in a nutshell. If you have the average true range on your chart, what's useful about it is you can look at this and you can say, this is essentially another way of looking at kind of recent volatility. And look at what recent volatility has done in gold. If you found it frustrating to watch gold, or you're just not seeing any follow through on gold, or you're finding it boring to watch, or you're waiting for something to happen, you're not alone, because what we've seen here is volatility went from very high on gold, right, where gold was moving, and you could get some really good risk reward trades when it's moving like this, right? That's why, a lot of traders, we really like the volatility. The worst is when, the reason I really don't like low volatility is, think about this relationally to, I don't know if that's a word, in relation to your swaps and commissions. Think about this. You pay to enter every time you take trades, especially if you're on a CFD brokerage. There's a cost per trade. Well, there always is, right? There's always spread. There's always commission. Even on zero commission brokers, there's still cost to making trades. And that cost, when market movement it doesn't change, right? It's fixed for the most part. Spreads are usually, they are in the same range. But if spreads are bigger in relation to the market's volatility than usual, meaning if market volatility moves lower and the market's just not moving a lot, the cost to trade in and out is in relation to the movement that you're getting, it's higher. So it's more costly to trade when the markets are just going nowhere. But you pay way less in swaps than most people because you trade GLD, right, Nick? Glenn, yeah. So I trade GLD, which I don't pay swaps at all. Swaps are, more of a Forex and CFD brokerage type of thing. So I trade the ETF GLD, which has its own list of pros and cons. I've actually done a video on the different ways you can trade gold on my channel. Maybe Chandler or James, if one of you guys could grab that video, that might be a really useful one to trade. I think it's like gold versus futures, or like XAU USD versus futures versus GLD. I did a video on that at one point. It was on that exact topic. So anyways, there it is. Thank you guys. Appreciate you on that. Check out that video if you're interested in like the most cost efficient ways to trade gold. XAU USD, especially if you're a swing trader, is not the most cost efficient way to trade gold. It's a great way to look at spot price, and I use it all the time for analysis, but I do not trade personally this, CFD variation. But I can't, even if I wanted to, because in the US, CFDs are illegal. They're a leveraged product that are not accessible to US traders. US traders who are trading it are doing so on offshore, unregulated brokerages, which for me, it's not worth parking any substantial amount of money in something that's not, regulated. Probably has a ridiculous thumbnail and title. It does. I think I toned up the orange in my face, and I really made it, dramatic. Anyways, guys, up next we have Forex James taking over. You guys know him, you love him. He's going to be taking over the stream for a little bit and going through some of what he's watching in markets. As always, before we toss the stream over to him, a lot of you guys love Forex James and his content. If you have not already, make sure to subscribe to his YouTube channel and check out the services and things that he offers over on elitetraders.io. You can check him out on his website or his YouTube channel if you're interested in signals. But the big thing is, when he comes on here, we basically kind of share this concept of focusing on the macro, looking at He's a little heavy on the currency side, which is great because kind of complements my focus more on gold and indices. So if you're more interested in FX, don't worry, we got you covered. We'll throw me off the screen and we'll put someone in who's more centric on Forex. So up next, we've got James taking over the stream. We'll be right back after this. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello. Let me just share screen. Sorry, I forgot to do it before I came on. Hope everyone's well. There we go. Should show for you in a second. There we go. Cool. So the dollar moving heavy and hard to the upside. So, oh, wait, hold on. I want to put it on the 1 day. There we go. So I'm very happy to see this. Some of you should be aware. I've been pretty bullish on the dollar for a while. I was quite contrarianly bullish into sort of this final bearish candle we had back on around the 30th of June. At that point, I started being quite vocal about being relatively bullish. And when I say relatively bullish, I was saying I was doubting it was going much lower. I thought 95 towards sort of 94 was definitely possible, but I saw upside coming pretty much around this area, which has happened. Now, I'm by no means saying I can see the future or anything like that, of course, but everything in my view was screaming short squeeze. So I'm not saying the macros are necessarily super bullish, or I'm going to start saying that we are going to see a massive reversal in the dollar back up to sort of 110, 115. But we've got what I wanted to see, which was really good. Now, something that I don't think I've mentioned before, but some of you will know this, some may not. The Euro index, we can see, is pretty much inversely correlated. So if we look here at the peak of the dollar, the recent peak of the dollar, around sort of late January, let's say the 13th of January this year, we can obviously, again, that's the peak of the dollar. The euro has the opposite. Back on the 13th, the euro essentially bottomed out, and then we saw the exact opposite to what we saw on the dollar, which again is pretty much a given to a lot of traders. That's normal. But the reason we saw it is because there was a lot of hedging going on with the dollar. Obviously, we saw the dollar selling off. Where is the next place to go? Well, it's the euro. That's the next liquid asset from the dollars. It's also risk on. Obviously, you've got gold, but that's more of a safe haven. I'm not talking about safe haven. I'm talking about liquid assets that investors will run to. Because it wasn't necessarily a full risk off market this whole period. Anyway, what I'm saying, the point I'm getting to is we are seeing these euro assets starting to take a hit. Euro dollar down. Euro Swiss has taken a bit of a hit. Today it's up. Euro CAD has also taken a downside as well. So off the back of today's, I've not got the chat open. I'll get to reading messages in a second. We did have US news today. Let me just double check what the data was. So no, it wasn't great. So we had producer price index, so PPI, not great. Now, we had sticky inflation yesterday. Obviously, we had CPI come out. So that was essentially the catalyst for the upside we've seen on the dollar over the past 24 hours, I'd say. Because that was really pushing back those rate cut expectations for not just July, but also dampening the expectations for September. However, with the lower inflation for PPI, the argument is definitely there to say the Fed could cut rates in September. But what we've also got to do is not get isolated, because yes, the dollar's had a pretty aggressive downside move. I don't think anyone could really disagree that this is quite a drastic downside. But since then, we've had jolts, we've had NFP, we've had unemployment, so labor market is relatively stable. We've had CPI remain sticky. The only real thing is PPI. So does that really put the Fed in a position for cutting rates? I'm still not convinced. Obviously, I'm completely wiped out of July idea. I am set in stone that the Fed will hold rates in July. I've got no question about it. However, obviously I could be wrong, but September remains a little bit dependent. Obviously, as the Fed says, data dependent. But as things are right now, I'm just not really seeing it. Again, anything can happen, anything can change. The next NFP could be crazy low. I don't know. But yeah, I'm definitely not in a position where I'm looking to sell the dollar, is basically what I'm saying in a nutshell. Now, euro dollar is another really, really nice one, because again, I'm going to sound like a broken record to anyone that's been watching my content over the past 1 to 2 weeks. You'll know I've been talking about euro dollar shorts for a while, basically just because of the overbought technicals that we saw. So we had the downside trend that we saw get established in 2009. We came up to this level again for the first time since 2014. And what's happened the past 3 times we came up here? Well, we sold off quite heavily. We've also got the 200 Bollinger Band here that is obviously being rejected very nicely. So all the signs were there, the RSI as well. All the signs were there, technical and fundamental wise. However, we're moving on. I am looking to get short on pound dollar. So I'd like to see some sort of pullback. Unfortunately, it's a little bit too low now for me to start selling. I don't want to sell after we've already had the pretty aggressive downside. We've already had the data. We're now at this double bottom. So I think being a seller right here is a little bit more FOMO rather than looking for a proper trade. So I'm looking for a 50% retracement. Stop loss just above these minor highs here towards 1.367. I think that would be a very solid take profit. And then, a very solid stop loss, and then a take profit down towards the low at 1.28. Now, again, anything can change. I'm not saying that I am expecting that rally on the dollar back to the upside, but I am more bullish on the dollar than I am on the pound right now. So I'm quite happy to take this trade, and if the data flips, then I'll either get stopped out break even, or I'll take the loss. It is what it is. So that's my view at the moment on the dollar. Still cautiously bullish, I would say, is the easiest way to explain it. I also, again, I'm going to get to the chat in a second. I know I've not replied or even read anything yet, but I'm just I'll get through this stuff and then I'll move on. So I saw Nick mention the dollar yen theme about the Bank of Japan hiking rates. And this falls into the Swiss yen idea that I was discussing earlier in the year. I really do still think that's going to happen. The Bank of Japan will hike rates. I've got no doubt about that. But the question is, when are they going to hike rates? Because at the start of the year, it was pretty much, they were on track. The path to normalization was, that was still in play. There was no real problems. But then obviously we had the tariff hit. We had a lot of central banks essentially just take a break. They paused, data dependent. We need to see the effects of tariffs. Bank of Japan's pretty much the same. We've seen them essentially not do anything because of tariffs. They've also got pretty weak data right now that even if the tariffs weren't weren't in the picture, their data just doesn't allow them to hike rates right now either. So I am looking to go long on dollar yen, possibly into this fib extension, then look to take profits and just wait and see what developments we do have with the BOJ. Because again, I'm certain they will hike. It's not a question of if, it's more a question of when, in my view. I mean, I guess you could say the same for any central bank. You know, you could say the ECB will hike. It's not a question of when, it's just if. Sorry, it's not a question of if, it's when. But hopefully you get what I'm saying. Swiss yen, similar idea as dollar yen. I am long term actually quite bearish on Swiss yen. I think we do have a lot of room to the downside here. You can see I've still got 120 marked up, which was I was looking at this level back at the start of this year. However, obviously I've had to scrap that idea temporarily. Maybe I'll just take a year break and I'll come back in December or January next year. We'll see. So I'm looking for very, very simple. Pull back into the previous all-time high at roughly 179 to 180. So that would be a very, very typical and bread and butter break that we've had here. We pull back, retest, and then continue higher. Again, very basic, very simple. Nothing really to go into there just yet. I think that's pretty much it on the watch list, to be quite honest with you. So euro dollar. Last thing I'm going to say before I check the chat, I do apologize. Euro dollar is difficult because I'm just going to quickly check my data here, but I'm fairly sure. Yeah, so we have Refinitiv long pound dollar. We have Refinitiv long euro dollar. They got stopped out very quickly yesterday. They should have been listening to the stream. Maybe they wouldn't have done that. Morgan Stanley had a buy limit on euro dollar. Oh, sorry, has a buy limit on euro dollar at 1.1575. However, there was a couple of others, and I can't remember which ones they were, but a lot of limit orders from euro dollar were sat at 1.16 yesterday and sort of the weeks leading up into it, and they've gone. So whether the positions have been stopped out or the limits have been cancelled, I don't know. But that's just what I've got on my screen. So it seems like some of those positions have unwound a little bit. Obviously, we can see euro dollars pulling back. So the contrarian idea to my idea. So obviously, if you don't agree with me, the option here really is to go long on this 0.5 pullback here. So you've got a very, very sensible fib. Obviously, we've got our low here, our high. We draw obviously fib from low to high. This gives us our 0.5 to 0.618 pullback. And then we could see this retest here and then the continuation higher. Don't forget, although I might sound like a bit of a bear at the moment, I'm willing to admit that 1.2 is definitely on the table. The issue is, so the thing with 1.2 is we had someone from the ECB, I can't remember their name. I showed it on one of the previous streams. But 1.2 is sort of the point of concern for the ECB. So if we do see Eurodollar start rallying up towards 1.2, it's not a case of what you would expect with the yen, where we see interventions when the yen is just falling off a cliff. It's not the same thing. The ECB isn't going to just dump the euro. What they would do, though, is verbally, what's the word? Not discredit it or discount it. They would sort of try and warn people away from it verbally. I can't think of the right terminology at the moment. Anyway, you get what I'm saying. Beyond 1.2 then becomes a problem. The last thing we heard from the ECB regarding eurodollar wasn't the value of eurodollar. So it's not the fact that eurodollar was sat at 1.18. It was the fact. It was the problem was the time it took to rally up to that point. It was too quick and too aggressive. So that leads me to say that even if you are a bull on eurodollar, the only point I could really see this market going to, in the near term anyway, is sort of 1.2 to 1.2, maybe 1.2 to 1.22, maybe. But yeah, I just think the upside is very limited. And this isn't even from a dollar point of view. Again, that's just from what I've seen from the ECB. Last thing, again, I know I keep saying I'll check the chat. I will do that in a second. I do apologize. Last thing is my open position. So the euro pound. I've been talking to you guys about this for quite a while. I've been DCAing euro pound. It's a very, very simple market to trade, really. Just requires patience. I am getting paid positive swaps, so this is lovely. Essentially just paid. And the drawdown is very minimal because it's small position sizes, so it's really no issue. We have pushed up this Bollinger Band. We're coming up to this double top as well, so I'm fairly sure we're going to start seeing some downside here. But I should clarify, this isn't a trade based on macroeconomics. This is purely just a mean reversion trade, because things like Euro Pound, Aussie, New Zealand, they do have very good mean reverting tendencies, because obviously the correlation between them. Last position I have is the New Zealand yen. This one's really, really good, actually. It looks a little bit tricky right now, but the New Zealand yen, very bullish, score of 9. So we've got the New Zealand yen as the top reading on the EdgeFinder, which is always lovely to see. And we managed to catch a really, really good entry down here. I did scale in a couple of days ago. When was this? Back on the 14th, so yeah, 2 days ago. Once we had the very clear break here of this level of structure, come down, retest, and then I was looking for this continuation higher, which did happen, but we didn't follow through too much. But I've got room for this market to come down a little bit further and then continue higher if needed. So yeah, that's pretty much it. Right, let me check the chat again. I do apologize. I know I've been running through stuff, but I just wanted to get all of that out of the way. I will actually move on to another section in a second. Don't check the chat. Refinitiv is a new Kramer. Maybe so. I mean, their positions have been really interesting, actually. And you know what's interesting is I think, when I say it, this is going to sound really arrogant or really egotistical, but I really don't mean it like this. This is more just an observation. I think that retail have done much better than the institutions recently. Over the past, when I say recently, I mean over the past 1 to 2 weeks. And that's because I don't think retail are as afraid of getting something like this wrong. So I was, again, very, very vocal about being quite bullish on the dollar. However, this has been front run so much, like, rate cuts, poor labor data, cooling inflation, trade wars, the one big beautiful bill. It was just bleak. And I think those rate cuts got priced in too quickly, too aggressively. The data has changed, or at least become a little bit better. And now these shorts are getting squeezed out a little bit. Or at least close. Maybe short squeeze isn't the right words, but again, it doesn't matter too much. You get what I'm saying. How you see DAX? I'll move on to DAX in a moment. Hello, James. Thoughts about gold? Sure, we can have a look at gold. Apart from Sean, we know you're doing your best. It's all good. No, I love Sean. Sean's a great guy. Okay, let's have a quick look at gold, and then I'm going to quickly move on to DAX because I do want to pay attention to what it's going to do for New York. Gold, same as before. I'm still in fact, I'm more flat now than I was yesterday, just because we've now had PPI that came out soft or cool. I'm just looking at the EdgeFinder as well for gold. It's completely, well, not completely flat, but it is flat. It's got a score of 4. So if anyone doesn't have the EdgeFinder, the criteria is anything below 4. Oh, sorry, 4 and below is neutral. Anything at 5 and above is reading bullish. And then it obviously gets to the point where it's the opposite. So -5 is now bearish and onwards is very bearish. So gold, it just doesn't give me anything. I would lean slightly bearish. But I don't know. Yesterday I was saying bullish, so I don't know. The main thing with gold, or my main problem with gold right now, is that it's just sideways here. There is no trend. There is nothing for me to do. So we broke out of the wedge that we had here, signaling, from a technical standard, signaling that this should be now buyers back in control, but we've just not seen that. And obviously with the dollar gaining strength as well, maybe gold shorts are in play. Maybe we are due for a little bit of profit taking, a little bit of an unwind on gold, a bit of pullback before we then start looking to go higher as the Fed does begin cutting rates, possibly in September or later. Maybe that's the play. But yeah, to actually pull the trigger, take a trade, I just don't really have anything. Hey James, good evening. Which time frame is best, daily or weekly, to make 20 to 25% a year in Forex? What's risk per trade? That's a really interesting question. So there is no real answer. I would say just flat answer is daily, but they both come with positives and negatives. So for example, the weekly, and I'm going to really nutshell this because otherwise I'll end up talking about this for the full stream. The weekly, you could essentially just identify the trend and blindly isn't the right word, but essentially just following. So let's take gold for it. I mean, this is a little bit of a cherry pick because obviously gold's been perfect. But essentially you'd wait for some reason to get into the trade, whether it be, again, in gold's case, it could be Russia, Ukraine, it could be Middle East, it could be Fed cuts, COVID, it could be anything. You'd wait for a weekly trend to be established, and you would just buy in area chart, no candlesticks, because candlesticks, in my view, are more for active trading. If you're using a weekly, you're more looking to position trade and just follow the trend and just keep buying in when you can, trailing stops. That would be great until the trend changes. Daily is more active. The daily is more similar to what Nick and I do, where you're looking for key levels, you're following shorter term macro. And yeah, but in terms of what you can make on each time frames, it really varies because, you know, you could be on the weekly risking 20% of your account for a trade, whereas someone on the daily risks 2%, and obviously the results will be completely different. So yeah, unfortunately, there is no one good answer. ramble. Yeah, I apologize. It's a habit. Although, because I'm on for an hour, I think I'm allowed to ramble a little bit more. Anyway, what I wanted to take a look at was the DAX, and sadly, actually, I've missed it here. So I'm just going to quickly go off the macro topic because this is like a side quest. I'm on a side quest at the minute, guys, because when you're a multi-billionaire and you've got nothing else to do during the day, sometimes you've just got to go on side quests. So what I'm doing is testing trader Tom Hugot. And the reason I'm saying his name quite often whenever I show the strategies, because I don't want to disrespect in any way, because obviously, as far as I'm aware, this is completely his strategy that I'm just looking into. So essentially, I'm taking the second 15-minute candle and waiting for a break of the range. In this case, it would be right here because it's the 215 candle. Again, I'm not actually trading it. This is just, I'm just marking up charts, watching results, and sort of seeing how it goes and collecting data. So interesting stuff. So in theory, could have gone to the 5 minutes and possibly traded this to the downside and collected some points on that. But anyway, like I said, it's a side quest, so we won't go into that too much. Okay, just going to catch up on the chat again. Gold goes up when people sense uncertainty. A worsening geopolitical situation could do that. Yeah, absolutely. What is stopping gold going higher? In my view, a lack of reason. So if we, again, I'm going to sound like a broken record because I talk about the same things quite often, but obviously as a swing trader, things aren't changing that often. So if we think about what's happened over the past, let's say 4 or 5 years, we had COVID, we had Russia, Ukraine, we had China, Taiwan. That wasn't a huge deal, but it was a talking point at one point. We had the Middle East. We've had, wait, what else have we had? Hold on. We had the Fed rate cut ideas. We had tariff wars. We had election concerns. So yeah, we've had a boatload of reasons for gold to be bullish. We had so many reasons for people to be fearful, concerned, uncertain. But right now, what's going on? Well, nothing. Russia, Ukraine was a long time ago. And I'll be honest, that's kind of done. I think the situation is still going on, but the markets don't care anymore unless we see an escalation. It's priced in. Same thing with the Middle East. It's priced in. Fed rate cuts, obviously Fed's on pause. We've obviously election fears are gone. Trump's in office. Trade wars pretty much calm now. Obviously, we've been pushed back to August the 1st, but in terms of escalations, there's nothing major. So why would gold be bullish is my question. I understand being a buyer because obviously, gold's been parabolic recently. So it does make sense to be a buyer of gold. But for me, I just don't quite see it yet. Maybe I'm behind. Maybe I'm missing something. But yeah, just from my own view, I can't justify it yet. Again, when the Fed does cut rates or they start sounding a bit more dovish, then yes, I might move into gold for a little bit. But yeah, 245, 230. Oh, Sean, you're right. Yeah, I'm getting. I got distracted. Yeah, you're right. 230, because this is obviously the NYSE candle, isn't it? My bad. I appreciate you telling me that. Marbella, amazed at the geographical beauty. Very nice. I've never been to Marbella. Isn't Marbella like a party island? Or am I ignorant? Yeah, Israel. The thing is with the central bank buying gold, I mentioned this yesterday actually. Although it's something to keep in mind, it's not, in my view, again, just the way I see it, it's not a reason to buy gold, because during this whole period, hold on, let me do this. If you were bullish on gold here and you were saying, okay, again, elections done, wars are priced in, Fed's not cutting rates, blah, blah, blah. But central banks are buying. Okay, well, I just got stopped out. Same thing, maybe here, stopped out. Maybe you made some money here. But this whole thing is basically the prime example of why saying central banks are buying gold isn't enough. Obviously, if gold's trending and there's still reasons for gold to be upside, and we're saying, okay, on top of that, we've got central banks buying. Perfect. That's great. We've got a nice little trifecta, if you will. But just central banks buying alone, it's not enough for me. It's addictive in the way only 1 to 2 hours flight from the UK. It's a popular resort. Oh, okay. Bro, which indicators helps in swing trading for supports and technicals and fundamentals? Well, you've got a lot of different indicators that are used in very different ways. The ones I like is an RSI. So I like to use a length of 6 because this one gives me the more extreme overbought and oversold situations in the market. So it's just my preference. I then use the 80 and the 20, obviously for the upper band and lower band limits. Again, it just helps me get the most extreme buys, oversold, overbought conditions rather than just the normal ones that are a little bit too frequent. So that's what I like. Bollinger Bands, I quite like those on higher time frames. So again, euro dollar was a good example of that, of why I like a Bollinger Band on the weekly. And a 200 moving average can work. I like to add a fib as well, just to time those 50% retracements in trending markets. But yeah, that's it. The thing is, indicators help. But you've got to always keep in mind that indicators are only price just in a different visual. And yeah, obviously there's mathematics behind it and things, but the RSI here says overbought, but there's nothing stopping a news release coming and the candle rocketing even higher. And you're like, oh, but the RSI was overbought. It shouldn't have gone higher. That's not how it works. The RSI reacts to price, not the other way around. So obviously it depends. Like, if we were a 200 moving average on a monthly time frame, maybe then, because obviously there's loads of people looking at the same thing, and but general rule of thumb is only use an indicator in confluence with other things. It's just using an indicator won't make you profitable. If anything, it's more just a way to filter. For me, it's just a nice, okay, well, maybe this isn't the best entry because actually prices may be overbought, or maybe we're still 2% away from the 200 moving average, so maybe I should wait. Sensitive DAX breaking all-time highs. Yeah, let's have a look at DAX. I can click it. There we go. Actually, DAX might be a decent long position. Maybe. The problem is the stop might have to be quite large there. So I'm going to scrap that for now. I'm not going to bother just looking at that just yet. Let's see. I don't see any reason the DAX couldn't come to new all-time highs or form new all-time highs. I mean, the way you've got to look at it is we've had a huge run, a minor pullback, and now we're running back up. Word on the street is we are due a 10% correction on the indices, specifically the S&P, but I'm not gonna put, I'm not gonna wait for that really, unless obviously we do start seeing it happen. So yeah, I think it's definitely possible. It might come this week, late this week, maybe early next week. I don't know. I'm not a huge DAX trader on a fundamental view. I like to trend follow DAX, and I'll look at general economics, but it's not. When I say I don't really know much about it, well, I'm talking more about the earnings and the companies within the DAX, if that makes sense. Because obviously the earnings are a huge part of the indices markets, like the S&P, NASDAQ, US 30, as you should know. So that side of things, I am quite ignorant to be perfectly honest. Waiting on the next 5 minutes. Let's have a quick look. Yeah, so interesting. I'm not going to say my opinion about this on stream because I don't want anyone to follow it. Because again, it's something I'm testing. It's not a strategy that's ready to be traded live just yet. And the reason I say that is because I don't have the data to support that being a profitable way to trade just yet. Swiss yen's moving nicely. So, I mean, it's still very, very far from my ideal entry point. So there's nothing I can do there. NASDAQ, yeah, nothing I can do on NASDAQ. Euro CAD. So let me see. Because yeah, this lines up really nicely. So my chart looks a little bit messy right now. What I'm looking at is our 200 moving average. We're coming into our 50% retracement. So if we can start seeing rejections in this area by EuroCAD, it may be an opportunity to buy. But I'm just going to consult the EdgeFinder as always. Let me get rid of the neutral. Spot score of 6. I think we looked at this yesterday. So this may be a play. Let me just undo these drawings. Okay, so to get into it, I would have to see a bullish candle close here on the H4. So I couldn't do it for another 7 hours because I need to wait for this candle to close. Then I need to wait for the next H4 candle to close. So I'm still a while away from being able to actually get into this market. But the idea is there. If it doesn't do that and we come lower, then I'll trade it more on a daily time frame aspect here on the original fib I had. Let me get rid of that for now. So this fib here. That's sort of the other option if we don't see any support at the fib I just showed you. You'll take it for me, Sean? All right, fair enough. Ball out, take care. Remember, keep an on Japanese government bonds and the surprise 1 point Bank of Japan hike that will strengthen the yen. Okay, interesting. Can you check out GA? Pound Aussie? Yeah, we can have a look. Actually, that looks technically quite strong, but it's not on the EdgeFinder as a bullish or bearish reading. So already I'm a little bit uneasy about it. However, this daily looks really, really strong, actually, just from a sort of range trading perspective. So obviously we've got our lows and we have our highs here. So we could just look, well, I say you, if you're wanting to be a buyer, could, in theory, just play ping pong. So buy the low, sell the high, and wait for some reason that this market might break out, whether it be the UK economics starting to turn around a little bit, Rachel Reeves getting fired. I don't know. But yeah, I think Pound Aussie actually doesn't look bad. I mean, the trend actually overall is bullish. So there is that. Maybe you've got something, but again, I don't have the EdgeFinder to really tell me if it's valid. So I'm going to stay away. Market's moving too fast. What do you mean the market's moving too fast? Are you on a 30-second time frame? Dollar still rallying. Incredible performance by the dollar. I mean, when I say incredible, obviously it's still nothing in the grand scheme of it. It's drop off in H1. However, I had this expansion zone marked up for a long time. So I'm quite proud of myself. I'll be honest. I think I've done a pretty good job there, because I called euro dollar last year. I called the top of euro dollar. I then called Swiss yen, and Swiss yen was just so wrong. I was really on the wrong side of that one. And the dollar so far I'm on the right side of. So I'm 2 for 3 at the moment. So we'll see. I mean, the dollar could just fall off a cliff tomorrow and that'll look stupid, but yeah, we'll see. What pairs do you trade? I trade pretty much just G10 currencies, specifically G7. So I like the dollar, the euro, the pound, yen sometimes, but yeah, I don't really trade exotics, so you'll never really see me trading the Mexican peso or the Brazilian or the anything like that. I generally stay away. I don't trade stocks. I like to describe myself as a very brown bread trader. You know, brown bread is just a bit boring, isn't it? It's a bit bland. It's basically my trading. I stick to the same things, but I think it's fine because I do have stocks. You know, I've got a long-term investment account, and that's where I have stocks. I've got a friend that gives me tips as well that does quite well. So I don't really do anything with stocks. I don't need to. But the beautiful thing about currencies is the way they behave. Because as I said earlier with euro pound, to someone that doesn't trade or hasn't traded for a couple of years and doesn't know behaviors and dynamics and things, they would look at this and they would say, why you're shorting an uptrend? That's, you know, trend is our friend, and that's the fundamental reason. The fundamental message there is completely fine. That's correct. But the beautiful thing about these markets, the main markets or the major markets, is they revert. They're essentially like elastic bands. Now, obviously, this is simplifying it massively. You can have massive runs that can be very dangerous, but as long as you're trading in a way that you understand and you can manage, it's fine. So like this, for example, we have a massive move to the upside, then move back down. Here, move up, move down, move up, move down, move up, move down. Euro pound specifically is just it's a very, very nice market for essentially just buy and sell, or specifically sell high and take profits low. But yeah, it's, the core idea of what I just said applies to a lot of major markets. Whereas things like stocks, gold, like the TRY, so Turkish currency, they just go. So take what I just said and compare it to USD TRY. So imagine trying. I mean, obviously you could essentially just buy and hold, but retail don't have access to this market, I don't think anyway. But yeah, imagine you accidentally clicked sell and you forgot to set stop loss. You know, your position's gone. You know, your account's likely just done. So yeah, I don't really trade those types of markets. Dollar Mexican, I don't even look at this market, to be honest. Actually seems quite reasonable in terms of price action, but still, it's not something I pay any attention to, generally speaking. You like it for longs? Do you use a trend on the 1 day? Daryl, yeah, I think there's definitely potential there. The only thing, just for, again, the way I trade, I'm missing the macro context about, okay, from here, sure, it does look like a buy, but why would it go here? What's the factor to drive price higher? Do you see what I'm saying? So for me, that's missing a little bit. But if you're more of a technical trader, I think the setup's completely fine. Yeah, okay, this would have been quite nice. So again, as I was saying, you wait for the range and you take the breakout direction. So it would have been something like this. So that would have been quite nice. So that's one to go in the data pile after stream. Okay, so New Zealand yen, a real pain actually, because yesterday it looked amazing. You know, we were like, oh wait, hold on, like this. And I was like, yes, I managed to catch the bottom twice. And it's going to rally, and now it's back to the first entry, which is completely fine. But this is one of the things I don't like about swing trading is it just sometimes it can just be very frustrating to sit for days and the market just pulls back. It's like, I've just waited a week for this trade and, you know, I lost money for swaps and I got stopped at break even or whatever it may be. Yeah, it can be ridiculous. Sorry, I guess I've just got to check something really quickly. Give me a second. Okay. So yeah, euro dollar continues to break lower. Again, on the back of that dollar strength, wouldn't surprise me if we continue even lower towards 1.15, maybe even 1.14, maybe. Again, just sort of banking on that unwind because we saw quite large buyers into euro, quite large sellers into dollar. That narrative's flipped a little bit now. So are we going to start seeing those positions get dissolved? Quite likely, yes. Okay. Alpha Main, good to see you, my friend. Hope you're well. Okay, so let me have a quick review. I don't think there's anything I've not gone over that I wanted to. Gold shouldn't be in there. So a quick look at oil. Still not doing anything. The problem, oh, this was it. The thing I said yesterday about EuroCAD is the difficulty I've got is I don't really have much of a view on oil because it's just been stuck in this range since the 24th of June. So there is no real direction. The last I heard, OPEC was increasing production, which does benefit EuroCAD. Obviously, that would reduce oil prices because it increases supply, brings down the Canadian dollar, benefits EuroCAD. However, again, that's the last thing I've heard, so I'm not 100% sure what the oil view is at the moment. Silver, silver might be giving me an early Christmas present at some point. So the view on silver I've got is I would love to be a buyer of silver around 34 because I've had the goal of 40 in mind for quite a while. I think back in January, some of you may have heard me talking about 40. And I would think I was in positions sort of just up and down, nothing too crazy. I think I actually ended up about break even during this period. I don't think I really did anything. And then as soon as really I got out, the market started rallying. So it was very, very unfortunate. So I'm just looking to see, because obviously the way I trade, I like to see these breaks and retests. We obviously had the break. Are we going to get some sort of retest, some sort of correction or mean reversion in price before we head higher? Because if we look at the technicals, we are technically overbought. We're hanging above the 200 Bollinger. We obviously had a massive spike to the upside, and obviously now we've got the US dollar gaining value. So this might be the catalyst for silver to have some sort of pullback for me to then start buying in at the daily or the previous daily highs. That would be sort of the ideal situation for me. Definitely more based on technical reasons, but yeah, you're right. The fundamentals behind it is what I'm waiting for. Daryl, let me just check something for you. Give me a second. Bear with me, folks. Bank of England remains cautiously dovish amid persistent core inflation and wage pressure. Markets price in potential August rate cut, while upcoming jobs and data inflation prints will guide the next move. So if you want to be a buyer of the pound Aussie, as I just mentioned, the jobs and inflation data is going to be your best friend. So you could, if I wanted to be a buyer of the pound Aussie, I guess the way I would do this is, and again, this isn't advice, this isn't signals. I'm just, again, it's just my personal view. If I had to be a buyer, I would go in something like this, very low risk. So maybe 0.5, 0.25, because then at least I'm in the market. At least, you know, if it does go my direction, my idea plays out, at least I have that position going. But if it doesn't work out, fine, a 0.25 loss, no big deal. But the idea of that is, yes, you're already in the market, but then you wait for the catalyst for the jobs data or the labor data and the inflation data. So they would be the catalyst for the pound to either run higher or run lower. So, you know, worst case, move this position to break even, don't scale in. But if if the data does come in favor for you, you would then look to scale in, trail this stop, and then you would build a position like that. Obviously, that's going a little bit, maybe a little bit too far. You don't really need to do all that, but that is one option, you know, depending on how you want to go about that trade. Oh, Arthurman, it's funny you say that. Just saw check pound Aussie. It's just on days. But yeah, we've just been talking about the pound Aussie, Arthurman. We were looking at it slightly earlier. What was it? Daryl mentioned it. It does look good, and I've just noticed as well. I don't know how I didn't see this earlier, but this 200 moving average is also a nice little supportive factor. And obviously we've got the daily trend to the upside. You know, now I'm talking about it, I actually quite like it. I'm partial to the idea, but again, I just can't do it, unfortunately. But I do like it, so there you go. Sweet. Okay, I've got just over 10 minutes left until Chris Pulver comes to take over the show. So if there's any questions, any market requests, let me know. That's completely fine. Oh, interesting. We've just had, well, not just had, I've just noticed the S&P at the Bollinger on the daily. Maybe we're going to see some sort of reversion back here to the 200, then continuation higher. Obviously, that's that's quite a wild assumption to make just off the Bollinger. So I'm definitely not saying that is going to happen, but it would be ideal now to see the S&P start to have a little bit of pullback, and then maybe the continuation higher from here. As I said, word on the street, and I'm not sure which street I got this from, actually. I can't remember where I heard it. It was from a credible source. It might have been Nick or Chris Pulver. I really can't remember who it was. But it was, someone was talking about a 10% pullback. This would be 5%. What about if, let me just see, what if we came down to 200? That would be 7. So maybe a pullback like this is reasonable because it's not really breaking anything. We'd still be holding the 200. We'd still be holding kind of the trend maybe, but anyway, it is what it is. I'm not going to sit here and try and call a 10% drop on the S&P just yet. I'm not that guy. Daryl, no problem. Off the main, great minds think alike. Love it. Nice one. Hi, James. Regarding the scoring strategy on the DAX, is it the 8:15 a.m. candle close or the 8:30 candle close? You know what, investing with Ian, it's interesting you say that because I've restarted all of my data this morning. So this morning I spent about an hour and a half going through all this because I realized I made, it's frozen. Great. I'm just going to go on a side tangent for a second. I upgraded to the Mac OS 26 beta. So it's like the glass theme that Apple's got going on. This whole thing is awful. The whole system, my whole Mac has slowed down by about 25%. I'm really annoyed because I can't put it back. Anyway, rant over. So I realized I was testing wrong. I was using the wrong candle. So I decided to just stop and redo all of it. So to answer your question, I do. Let's go to London DAX so I can show you. I've got rid of. Oh, I didn't get rid of them here. So I've been using now the 8:15 candle close on the 15 minutes. So obviously we have session start, or London session starts at 8 a.m. Then we have the first 15 or the second 15-minute candle close, and that's the one you use for reference, or that's the one I'm using for reference anyway. Again, it could be wrong. I'm still testing and figuring things out for this, but that's the way I'm doing it. Anyway, I've lost you guys. I don't know where you've gone. There you are. Okay, I lost the browser. Sweet. Okay. So what do we have left to cover? I don't think there's really too much going on here. I think the VIX is still quite soft, isn't it? I've not seen anything regarding the VIX. Yeah. So we don't have really anything here. Okay. The dollar is starting to break previous highs as well. This is starting to indicate a trend change. Short term, obviously, I know the overall trend of the dollar is obviously bullish, but when I say trend change, I just mean this bearish trend here. If we can break above the high at 98.69 from the 16th, and then we go ahead and create a higher low, that might be an amazing long opportunity. And again, this is just sort of best case scenario if we continue to get good US data and things like that. So interesting. We'll have to pay attention to that one. Ian, no problem at all. New Zealand yen, I am conflicted. I'm a little bit, there's half of me that is just happy to let it run. Just leave it, let it go. The other half of me is seeking a bit more risk. So maybe scale in, if we can see a rejection that's 200 and have a stop somewhere here, something like this. Because these positions are 1% each, so I've got 2% on New Zealand yen at the moment. I'd be willing to push it to 3%. Because obviously we've got the EdgeFinder of top reading on New Zealand yen. We've got a very bullish trend. The yen's data is fundamentally weak. The RBNZ's on hold. Bank of Japan is also on hold, but they can't hike rates right now. Obviously, we've got the rates are beneficial, so we get paid swaps because the Bank of Japan rate is 0.5. I'm actually not sure what RBNZ is off the top of my head. Let me just double check. Anyway, higher rates with New Zealand, so it is beneficial for investors to hold the New Zealand over the yen, and that remains to be the case. So this might be quite a nice play, but it's a little bit risky to put 3 positions on. I might have to trail the initial one to break even before I start considering adding in again. But anyway, that's a different topic. How feasible do you think pure technical analysis is? It's a good question. It's the age-old argument, really, isn't it? What's a better strategy? Is it technicals, fundamentals? What's better? I wouldn't say there is an easier one, because I think the only way really to have, and there are exceptions, I'm not saying, when I say the only way, I'm not saying this is a rule, but I'm going to say the only way in terms of the general masses of traders to really have a technical or a profitable technical strategy is to build it off data. So for example, what I'm doing is I'm saying, okay, the overnight range was this many candles. We had then this many candles until we broke this session range. The session was broken by X amount of points or X amount of percent, whatever it may be. But you collect the data and you say, okay, this is now my edge, because I know over the past 500 trades, this exact criteria has led to this exact result, or this result on average. And you can build something like that. And a good example of someone that does that is Sam KB and also Trader Tom. Both of them have sort of mechanical, let's say statistical edges, because I think Tom's a little bit different, but Sam does. Sam's a great trader, and he does pretty much just that, just collecting a lot of data and building something around that. Whereas fundamentals is also difficult because it's a lot easier to access. So for example, the data, you've got to go and do it yourself really with the charts if you're doing technicals. Whereas if you're a fundamental trader, you could get the EdgeFinder and it's just there for you. Or you could get New Squawk or whatever else, and the data's there. But then obviously you've got to put the effort into understanding how to interpret it and what the context is. So there isn't an easier one or a better one, I would say. But as Daryl and Lee say, I think the real best option is to combine them. I think, again, for the general average trader, it's just the easiest approach because you don't need to be an analyst and you don't need to be a technical scientist. You just need to be pretty good at both and you'll be fine. As long as you could identify a trend, identify some key levels, read a score from -12 to +12 on the EdgeFinder, you're pretty much set to go. Obviously, that, again, I'm simplifying it massively, but that's the simplified version. Whereas, again, if you wanted to do something like this where it was very or only technical, you're gonna have to put weeks, maybe even months of effort in just on Excel and formulas and things to just try and find some way into the market that gives you an edge or gives you a profitable outcome on average. And that actually leans into pretty much the quant side of trading, because that's, again, simplifying it massively because quants do a lot more than just this, but it's the same theory, really. They will look and say, okay, over the past 10 years, on average, this happens. Then on average, this is the result. And then that's how they start building algorithms. They find inefficiencies. They find ways to get an edge in the market. So you'd essentially be a quant trader, but on a retail level. Okay, right. Just got about 2 minutes left, so I'm just going to do a quick run through, make sure I've not missed anything. Swiss yen, bullish but can't get in. NASDAQ, I would like to be a buyer, but not just yet. Euro CAD, I'm just waiting to see, can we get a bullish close off this level here? I think Nick, I'm fairly sure I heard Nick say he's in it. So we could use Nick as an indicator, the trader Nick indicator. So maybe Euro CAD, if we can just get a bullish close off here. Pound New Zealand's actually coming up to entry. I'm just going to reopen the EdgeFinder. I closed it for some reason. Bear with me. I'm fairly sure Pound New Zealand is one of the most bearish, or the most. It is. Actually, this may be the opportunity. I was talking about this one yesterday on my segment. I said it was too low to sell because what I didn't want to do is sell here and it goes back to the top of the range. So I'd rather wait for either the retest into the highs, and then obviously if it stays range bound, fine. That is what it is. But at least for the majority of that range bound movement, I'll be in profit. Whereas if I sold it here, that would be a total range of drawdown. Or I wait for the break, the retest, and continuation. But it looks like we are going to remain within this range for now. And again, the EdgeFinder is bearish. So this might be the opportunity to short pretty soon. So I'm actually going to set an alert because I'm sick of missing trades. So I've got an alert set 2.26876. Okay. So that's the play that may be coming quite soon. Dollar yen, again, I'd quite like to be a buyer in the short term, but it's too high to buy right now. Euro Swiss, don't really have anything there. Pound dollar, I'd love to be a seller in pound dollar, but I can't get in just yet. Euro dollar, I'd also quite like to be a seller, but again, there's no entry there just yet. Euro pound is coming back down quite nicely. So my average price in euro pound is roughly, it's actually slightly higher than it should be because I used a higher lot size on this entry. It was a complete misclick, but it wasn't that high. It was like I think it was 0.02 lots higher than it should have been. So my average price is slightly higher than in the middle, so it's roughly around there. New Zealand yen, we've already looked at this, but currently it's still within trend. It's still completely fine, but the second entry is in a bit of drawdown now. Overall, it's a profitable position. So that's that. Yeah, no problem. Let me just check. Okay, so we do have Chris Pulver coming on shortly. Andre, GBP USD, go to 1.325. Let's just mark that up and have a quick look-see. 1.325. Yes, I would say that's very possible, if not, I don't want to say guaranteed. Obviously, I shouldn't say guaranteed, but that does seem like the next real stopping point for pound dollar, to be honest with you. So yeah, something like that. If we break this low, I would expect some sort of pullback to the upside. We are technically oversold now on the H4, so I would expect some upside, but yeah, in the medium term, I want to say medium term, I mean within sort of the next 1 to 2 weeks maximum, I would expect, yeah, this level to get hit. You're long on pound New Zealand on the H4. Yeah, I mean, I get it, but I think again, it's kind of a range play right now. So if you were bullish, this would be a great place to buy. If you're bearish, then where I'm looking to, I think, is the best short point at this moment. So we'll see. But again, the EdgeFinder is bearish, so to me, sells are really the only option. Excuse me. Okay. Aussie New Zealand's still getting a bearish reading, but I don't know. I've not checked the Aussie New Zealand in a while. Okay, I think Chris is here. Yes, he is. Great. Guys, Chris Pulver is coming to take over the show. Don't leave when I leave. You're in great hands with Chris. I appreciate everyone being here. You've been great as always. Enjoy the rest of your days. Don't get margin called, and I will speak to you all very, very soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? How we doing? Just typing in one quick update here. Okay, getting close to take profit on SPX. Another 3 cents is all I need. Prices come back to center very nicely. Let's go. Hopefully that will trigger here in just a couple of minutes. Let's take a look top down. Markets are a little rattled from yesterday's sell-off. We had intraday movement was decent. We had a high at 63. That was a gap through the CPI announcement. Markets dropped, 1%. I guess that would have been the close yesterday. So we dropped about 0.94% on the SPX yesterday. We dropped, I want to say something comparable to that in NDX or NASDAQ. NASDAQ's dropping a little bit harder today. Oh, where's today? Let's go QQQ. A little bit more follow through today. See if it turns. Time will tell. Don't turn too hard on us now. I'm trying to see if this floor will stay around 62.40. I kind of like where it is right now to get me my profit on SPX. So far, this is pretty good. I'm looking at a potential top today around the 6,300 handle, potential bottom at 62. That's a rule of 16 on the VIX based on current levels. VIX is around 17.13. We had a reaction on the VIX at the 8:30 news, which was PPI. It came in with a hot revision, but missed on both. And something tells me like that's weird. 0%, 0%. But the revision from a 0.1 to 0.4 and a 0.1 to 0.3. I mean, inflation is not doing anybody any favors right now. Like yesterday, CPI was hot. PPI today, outside of this, lower than expected, probably likely to be revised higher, just like this was last month. So we'll see what the market does. Yeah, I think it's a revision that I'm probably the most cautious of, and then CPI prints yesterday were not too great. But I'm just trying to get out of my SPX trade this morning for a couple of bucks. I need about 5 more cents. It's got to be close. So maybe probably in the next 9 minutes, I should be able to get out of this trade. If price just stays where it is. Price goes up a little bit, that makes it easier. I got this trade centered out around, I think around 50-ish. So between like 50, 55, that should be able to push this thing into profit for me. And then for the day, yep, there we go, just hit target. So that's profit target hit. And by 10:22 a.m. Eastern time, profit target hit. Boom. So taking that as a winner. Cool beans. Take a little win there. Off we go. Okay, and I'll watch to see if I can find another trade for the day. So if we, I mean, we could kind of hang out in this level for the day. That might be one of those fancy little like iron butterfly trades where you can, sell the middle and give yourself some credit. But I don't know if we're going to get directional. If we get directional, there's room to kind of go up into the 75, 85 zone, high of the day around 6,300. My concern is to the downside. If we break 62, there's not much stopping this market down to 6,200. So I think if we're going to hold here for the day, that's understandable. But if we break, I actually want to be fairly bearish, going down to like 62, going down to maybe even 6,000 over the next couple of weeks. I think this is kind of the pullback that I've been talking about. But we just have to break some support. Right now, intraday, if we don't break this support, then it's just noise. After yesterday's intraday move, I mean, today might be a little bit quieter, right? Market kind of like allow some intraday ventilation where things move a lot intraday, and then the next day it's like tighten it right back up. So the VIX today is kind of all over the place. VIX was, smashed down on PPI, and then it comes right back up, and it's just kind of choppy between this like 16.5 and 17 VIX. So still looking at a potential plus minus 1% on the day. And that puts, like I said, right around 6,300 to 6,200. But the market may go nowhere, which is, I suppose, understandable. Let's go currency strength. By the way, today I have a hard stop at 11, so I'm going to try to get through as much as I can. Flow-wise today, New Zealand getting hit pretty hard this morning at 10 a.m. Swiss getting weaker. That's fine. Not a lot of volatility today in currencies. Japanese yen up, dollar up. Interesting. So Swiss weakest, New Zealand weakest, JPY and dollar getting stronger together. Strange. But that's where we're at for currencies today. Quick peek, SPX is flat, NASDAQ is down, Dow is up slightly, Russell coming back. I mean, Russell was down almost 2% yesterday. It was down like 1.86 or 1.9% yesterday, and now it's back up 0.6. So that's okay. You don't have like perfectly correlated U.S. markets right now. The S&P and the NASDAQ are being dragged up by, NVIDIA was a big pop this week on the H2O chip, but we are fading. I was looking at a summary here for financials. Conclusion. Okay, this is, I looked at, I just did some AI diving here and pulled JP Morgan, Wells Fargo, Citigroup earnings and transcripts and earnings calls to give me a summary of what's happening from, the positives, negatives, the economy, the consumer. And anyway, here's conclusion. So Strong earnings driven by robust consumer banking, investment banking activity, but their forward guidance, which we didn't have last quarter, nobody really talked about anything forward guidance wise. Forward guidance reflects a cautious outlook due to tariff-related uncertainties, potential economic slowdown. JP Morgan is the most optimistic, citing a resilient economy and positive policy developments, while Wells Fargo Citigroup emphasized client caution, macroeconomic risks. The bank's collective view aligns with JP Morgan Research projection of robust but volatile growth in 2025, with a significant recession risk driven by trade policies. That recession risk, by the way, is around 40%. So big investment banks showing about a 40% risk of recession. It was as high as 50 to 60% earlier this year, obviously during all the drama in March and April. Balance between strong fundamentals, external uncertainties, defends your economic outlooks. So anyway, for the most part, it's uncertainty, caution, but resiliency. And as I emphasized yesterday, if the housing market can't crash, if the economy doesn't, if the consumer doesn't crash, if the bond market doesn't crash, if the dollar doesn't crash, those are all ifs, but those all shouldn't just crash fast. And we don't need all of them. This is one of them. It's like that's your stool. You got 4 legs on the stool. If one thing cracks and breaks, everything else comes with it. So what is interesting to me is like right now we are hearing a lot more tariff talk out of Donald Trump. And I don't know if he's just getting brave because we're at all-time highs and he's like, well, clearly we dodged the bullet here. And I'm just going to be, more aggressive on throwing, like it's kind of like the Oprah Winfrey thing, like you get a tariff and you get a tariff. Look, August 1st is a tariff deadline. I don't know what it looks like. I do know that coming into Liberation Day, the markets were anticipating like an understanding about a 10% blanket tariff across the world. That's what the markets were anticipating. That Liberation Day rollout was nothing of the sorts. So that's why the market reacted so unfavorably. And then clearly the pivot was aggressive and we're just pause. Let's not talk tariffs for 90 days. How about that? Well, now we're starting to speak back up. Brazil seeing tariffs, copper sees tariffs, pharmaceuticals, starting low and maybe up to 200%. So I saw this morning on Pfizer. What the heck? So it's like nobody's safe. It's like, is it just like sector by sector by sector, just picking them off? And once you have like the tariff crosshairs on you, can you survive it? And then it's like, you don't have to worry about it anymore. So anyway, again, it just creates a lot of uncertainty, right? So what does that all mean? I just think we have a correction. The big question is a pullback going to see a dip or a pullback going to see way more of a correction that is like, okay, well, the Qs have ripped up 30+%. Is this market going to be pulling back into something like equilibrium? Maybe we don't take out the April lows again, but we pull back into a level like everything I've been talking about. How about this giant 3, 4, 5% US-China trade agreement gap? That to me would be a nice equilibrium for price to find and then figure out where do we go from here? Like the reality is, are we going up or down from maybe pulling back to it? And I know that getting there is not going to be easy. And I know getting there is not going to be fun. If we get there, it's not going to feel good. I can promise you that it's not going to get there like, oh, just a little smooth 5 and 10% correction. That doesn't happen. Not in today's market. So how we get there could be really nasty, really violent. But just have the courage to buy good levels, have the courage to position some trades. Hopefully with a spike up in volatility, that gives us a good chance to be premium sellers and sell those expected moves, which are going to be greater than the actuals. That's how we make some good money. Okay. Myra 0 DTE, pattern day trader rule. That's on a margin account. Yep. But there's workarounds. It's easy. I do it with members every single day. I've got members that have 2 small accounts, right? Small account here with Interactive Brokers, small account here with Tasty Trade, Thinkorswim, E-Trade, Fidelity. So 2 brokers, small accounts. You can trade 2 days a week and 3 days a week. No pattern day trading, right? That's a workaround. You can also trade futures. You can trade ES, MES. You can trade futures. There's no pattern day trading in futures. So for futures options permission. So not hard. And also I wouldn't be surprised from, some of the connections I have with CBOE and Tasty that I know that they're pushing hard to try to get some of that additional, trader love out there where there will be no more pattern day trading, because I think the US is the only country that does it. I don't think Canada has pattern day trading rules. Europe doesn't have pattern day trading rules. Asia doesn't have pattern day trading rules. Their margins are different. Their leverage is different. But pattern day trading, I think, is only in the US. and it's only on margin accounts. So hopefully that's something that goes away. It's like trading has been very retail trader friendly the last few years. 0 commissions, very low fees. Like entry only. Like I pay entry only commissions on my options. So hopefully that stuff goes away. It'd be nice. But yeah, or you can just have a cash account. Cash account, you always have enough cash. I mean, buying power for the trades I do is anywhere between like $500 and $2,000. So if I have enough cash to cover that trade and trade it every single day, there's no pattern day trading. Your only option is interactive brokers. Gotcha. So you literally have no other broker. That's okay. I mean, you still get 3 days a week. And if you're in my class, we've kind of narrowed down like the ideal trading days to Mondays and Wednesdays. So, I mean, if push comes to shove, if you're worried about the pattern day trading, Mondays, Wednesdays are, to me, data wise, the 2 best days to do it over the last 3 years. That's what we've shown. So, I mean, there's definitely workarounds. Okay. All right. So let's go a little top down here. SPX. Yesterday's candle kind of put in a bit of a shakeout around 6,300. Right now, if we zoom in, 6,300, 6,200, that to me is this little narrow level that, and I don't think we break too much higher than 63. I think this kind of puts in a bit of a range play. Going back here on this price action, I mean, I don't think I'd be terribly surprised to see this is the resistance area. And intermediately, we have about a 6240 support and a 6200 support. So I'll make this a little bit smaller. But if we see price dancing around in here, obviously this is just a bunch of noise. So this is all noise. If we break below 62, that's when things get a little bit more quick to the downside, probably heading towards 6,000 or lower. But this is the hard part about timing the market. I don't know if this market's going to do it today, do it tomorrow, do it in a week or two. I don't know. I don't care. But I do know that if we get below 6,200 with some conviction, that's the best time to appropriately bearish. So an example would be if we break below 6,200, every day I come to the market, I could probably do a bear call spread and have a chance to do pretty well. Right? If we're going to break down and go lower, we might gap lower, we might head lower, we might intraday price action go lower, but bear call spreads could be great down to 6,000 or lower. But if we don't break that 6,200, all I'm doing is guessing and wanting and begging the market to go down when it doesn't want to budge. So don't force trades, especially based on time. It's like until price proves some confirmation, don't force the trades, right? But when price finally proves a break below 62 with some conviction, then yeah, I can focus on maybe open up the floodgates for like 200 to 300, 400 points down, and that's fine. It's not the end of the world. Like it's literally like a 5% correction. But to do that, you might have some direction. And that could be, 0 day every day the market's down. That's rare. But usually it's going to be the market's going to try to gap lower. Okay. So if we did like a week expiration or a 1 or 2 day expiration, just try to get the traction to head that way. Make sense? All right. I'm going up. So Ken on dollar Swiss, I'm looking at like 85 to 8,600 on dollar Swiss. That's where I'd like to take some profit on that currency. Okay, all right. Like I said, I got about 25 minutes before I have to stop. So let's do some more top down. Currency strength, interesting flows. Japanese yen a little bit stronger. Not a ton of volatility. Swiss weakest. New Zealand also joining, which I think is kind of interesting to get that. New Zealand's coming out of nowhere. Aussie also dropping a little bit, but it's mainly yen up, dollar up, and then the pound was kind of strong all morning. But New Zealand, look at this, strongest overnight. Now one of the weakest. Volatility. Right now, NASDAQ is clinging to a flat day, 0.07. Qs are down slightly. Dow is up and Russell is up a little bit. Okay, volatility index up over 17. Let's go dollar index. Again, maintaining a bid. Daily time frame, lots of candles on the way up. I still think this has a, bid, maybe a pullback, maybe a bid, maybe like a little 3-wave move to get this thing back up. I keep saying like 101 to 102. So am I really long the dollar? No, I'm not really long the dollar. I'm just saying don't sell, don't short the dollar. So I saw the euro dollar was down like 60, 70, 80 points. That's fine. Like this is the inverse of euro dollar pretty much. Oil, 65 support for now. I'm hearing rumblings of OPEC cuts coming in August, so that might keep the floor in around 65. But I have a futures trade on down to $50, not 55, $50. So I'm giving myself a little bit more wiggle room for price to maybe fall, but still offer a couple $100 in oil. That wasn't out super far. I think I went out to December to see if oil just stays somewhat resilient. Natural gas, 1574. I have a covered call at 16. That's part of my diagonal spread. I guess it's just a sell call, my diagonal spread. Gold, not much happening here. Not too exciting. I still think gold has to find a 144 to 200 moving average this year. I'd be shocked if it didn't, but I think we're just going to go sideways for a while. Silver, pullback. If we pull back to $36, it's still very well supported. If we pull back and this becomes kind of a nasty pullback, it's still very well supported. The deeper we pull back into here, or if you have a price where it closes below the 200, then closes back above, closes below, closes back above, to me that's a great spot to get long. So I'm still long on silver until about $48. That's my price target. I'm gonna hold silver for a while, okay? But if we pull back to a 50-day or a 100-day or even this 200-day, if we pull back and go back above, I'm going to add more exposure, probably a silver futures trade, probably adding some SLV, I don't know, probably some naked puts, honestly, and just see if that level holds and gets back up into highs again. I don't know if it's going to pull back that deeply, though. This was a pretty convincing breakout. That breakout there, we just have good levels. The 21's a little aggressive. The 50 to 100, I think we could find some support. So I like some silver. SPY, just take 10 times less on the SPX. I mean, basically, if we break 620, on the SPY, it's a little bit lower than that. It's going to break this 618. So we're looking at a high around 628. So 628 on the upside would be my resistance level. If we break the floor around 618 to 619. Okay. So if we break below 618, 619, I think we have room to fall into the 610, 600. 600, honestly. I think we fall to 600. So it's just this little tiny box right there. If we break below that, I'd be looking for this level to get filled. That's the ceasefire gap, a pullback of anywhere between 5 to 10%, and gap there for the ceasefire, gap here for the U.S.-China trade agreement pause. And somewhere in there, the market kind of settles in to see where's reality. Okay, we'll see. But what I'm really looking for is if we pull back, I'm not just going to start buying the dip. What I'm going to start doing is looking at positioning for options. All right, I am not just buying the dip, because if this thing gets deeper and more violent, and maybe we pull back into this, clustered like Liberation Day nonsense and trade war nonsense. Maybe we're right in here because what do we have? Maybe trade war round 2. And the market doesn't know how to price it in yet. So we could have more volatility ahead. So I'm just cautious, as I should be. But we have an unpredictable president. We have an unpredictable president that is throwing policy out left and right. I know this big, beautiful bill got passed, but on top of that, what the big, beautiful bill is not pricing in is potentially a trade war that we saw a taste of in April until we pivoted off of it. So I don't know. It really just depends. Like, do countries line up and say, yep, we'll go to business for the U.S. and we'll pay these, we'll happily pay all these tariffs? I mean, probably no. Nobody wants to. So big trading partners like Eurozone, like Japan, even Canada, Mexico. It's crazy that like our closest like geographical allies were willing to tariff the crap out of them. So anyway, that's where we're at. A lot of uncertainty. All right, oil, we're good. Gold, silver, we're good. Bitcoin, 118. So we got up to 123.250 roughly. Nice little pop on Bitcoin. Possibly a pullback to the previous highs at 112 again, 112, 110, possibly pull back there. I still have a measure move towards 132, almost 132,500. I'd like to see it go higher, obviously. But like we've seen in the past, accumulation of Bitcoin, right? So if we are going to go up, pause, up again, pause, up again, pause, if we draw a really aggressive trend line, if we start to get on the right-hand side of that trend line, maybe that's a good spot to be taking some profit. if you want to take profit. I will be probably trailing, buying more puts if I feel like we're going to get a downturn. And bigger picture, I'm still liking the exposure in Bitcoin. Okay. If we have stickier inflation, higher yields, weaker dollar, gold's going to go up and Bitcoin's going to go up, most likely. So I don't think this is something I just like, what a good trade on Bitcoin. I'm out. I mean, Bitcoin's been an ongoing campaign trade that just continues to get a little bit more legit, a little bit more mainstream. I was just listening to a podcast episode yesterday, and it's a big like multi-billion dollar fund, and they're like, nope, we don't have any exposure in Bitcoin. There's no history. It's like, I get it that gold has thousands of years, but Bitcoin for the last 10, 11, 12 years, actually I guess 14 years now, has, I mean, I get it. Like it's an uncertainty for like old school, like archaic funds and 60-40 portfolios. But I think if you have, as a trader, I think it's crazy not to consider the asymmetry of Bitcoin. You can always trade with defined risk. I could allocate, if I have $100,000 portfolio, I could literally put in $1,000 of Bitcoin, and if that $1,000 helps me make an extra $1,000 to $2,000 to $3,000 to $4,000 to $5,000 a year, that's good performance, and that's just a little bit of exposure. So it's funny that it's like, well, you can get 4% risk free. It's like, is it risk free though? Is it risk free? If US ever defaults, and I mean, if we have a president that would push us towards the brink of default, it's probably Donald Trump. The guy's had countless bankruptcies in his career. He bankrupted a casino. Like, I know the country's not a casino, but if we're trying to just like leverage our way through and grow our way through debt and a fiscal deficit, I just don't think you can treat a sovereign fund like something you're just going to default on, So anyway, but yeah, I would say that would be the power of Donald Trump. If we're going to push towards something to just do a sovereign reset, he'd be the president's like, what? We're just going to reset. We're just going to call it the Amero. We're going to call it something else. We're going to have everyone do like, our $37 trillion is going to be worth one coin. The Donald Supercoin is going to be what covers $37 trillion in debt. Anyway. All right. Bitcoin's resilient. I like it. We're at highs. I think there's more to go. I like the 130s for a measured move. Game theory gets us up into higher levels, maybe some exponential trading, like, the big hockey stick growth that a lot of stocks have been doing since April. If we start to see some fun and exciting stuff there, obviously that gets me a little bit more cautious on trailing stop losses. MicroStrategy still hanging out at 447. Earnings on MicroStrategy, which honestly probably mean next to nothing out into August. So I'm still looking to do some flips here for MicroStrategy to get some income. I did some rolls yesterday that ended up pulling me in $20 of credit, so that wasn't too bad. Coinbase, I have a little call condor on this one. Price can go up to 455 before I take in any heat. And if it does get up towards 420, 30, 40, I do have a potential profit trap on this as well. This is in Pulver Alerts. There's Coinbase. This is a call condor. Right now, it's up 7%, no big deal. But the nice thing about this trade is if we like slowly incrementally go up, and I can stay out of the way of that 455 threat zone, I potentially have a $5 profit trap. So there is a chance that this 58-cent credit could pay an extra $100 to $200 to even up to $500 bonus. So that's the profit trap that looks something like this. Price goes profit trap, and then I take on risk. So I have credit coming in. That's my 58 cents right here. And then I have the $1, $2, $3, $4, $5 bonus trap. If price is between 450 and 455, so 451, 2, 3, 4, 5, all bonus trap, which is kind of nice. Actually, I take that back, 445. So it's 446, 7, 8, 9, and 50. And then once we get 450, that's my max profit trap. So, and the reason I did that is because the call skew and the call premiums were so high on coin that in order for that price to really be threatened, we'd have to maintain about a 3-4% move a day in order for that trade to be threatened by July 25th, which is before earnings, by the way. Earnings, I think, is the 31st. So hopefully we don't have like a huge nasty ramp up into earnings. Obviously earnings can blow through the highs and lows, but I'm trying to get out of the trade before earnings. So I kind of like that position. All right, we'll keep an eye on it. What else? Japanese yen down quite a bit. This is the inverse of the dollar yen, like I mentioned, right up to the 149 handle. I'm not sure if anybody is really excited to short this, but I'm not. I'm just going to wait. I think you just be patient on every yen pair. But we have a channel right now in dollar yen. Maybe it hits some resistance here. There's strong support. So maybe this becomes resistance and then sells back off and then buys again and then sells back off, and just monitor the structure. Does this go all the way back down to the lows? I mean, not a bad spot. If you're looking to sell, tight stop loss, there's potentially a pretty good trade there. I mean, I'm not guaranteeing direction or anything, but if you have a pretty low risk to high reward, it's a good setup. You know, if you're going to take this down to a smaller time frame, try to get some confirmation. Fed share position I find concerning. Yeah, but it's honestly, I just don't think you can just remove. You can't just oust the Fed chair. You can't just remove Jerome Powell. He's not just going to resign. I mean, look, the Fed is going to cut in 2025. Most likely, the Fed is going to cut. Okay, they're not going to cut 50 basis points or 100 basis points per meeting. They're going to cut probably 25. Why? Because we are showing that inflation data is still not going down, right? Tariffs, rise in yields, higher inflation. So we don't know the extent of tariffs and inflation, but we do know that data-wise, month to month, it's coming in hotter. PCE is coming in hotter, CPI is coming in hotter, PPI is coming in hotter. So I just think that the Fed right now, it's like, okay, we're willing to cut to be a little bit less restrictive, but the real game that the market is playing is with the bond yields. So if either the bond yields are range bound between like 4.2 and 4.5 or 6, this is where things get questionable. We come up here, that's going to break the market. You know, it's like there's a reason that the market's still gone up and yields have been sticky for the last couple of years. We haven't really had a threatening 10-year level yet. Not yet. It's not fun. Everything's more expensive, but we haven't had a real threat. Like the basis trade is what the threat was. And so it's the rapid change in rate that is the disruption, right? It's like that's one thing you have to remember. The markets, for the most part, can absorb and digest a lot of things. They can shrug off a lot of risk off. They can absorb and believe in a lot of optimism. But it's like the slow, steady drip and consistency is what the markets can have. The tough part is when it's a rapid change. If all of a sudden our earnings revisions, like let's say the US is like, oh fudge, our 22 times earnings for the S&P should be a 19. Boom. All of a sudden we see a massive correction, right? If our yields spike up 50 to 75 basis points overnight, like they did here during April's basis trade blow up, the market's disrupted, right? That's when like credit spreads blow up and things are crazy for a couple of days. Again, you got to give the market a lot of credit for after crazy stuff happens, things tend to really tighten up. It's almost like everyone just kind of goes driving along on autopilot. And then it's like, you know, we've probably all done this. You're driving late at night, you kind of swerve and veer off the road and you hit the little bumpers on the side and then you get back in swerving lane, you know, but what we're doing here is we hit maybe the guardrail and then we come back. So it's just the market, you know, just getting that, like that snap of reality. It's like, don't break anything. And then we're back to like trying to stay, you know, on the road. So, I mean, this gets disruptive if we're up into like, you know, fresh highs in the US 10-year yield. If we get up to 4.8, 4.95%, I think this is, you know, what's happening. I think something breaks. You know, I think that this is a big risk event for the bond market. This is something happening in yields, which would be like the big old bond vigilante trade all over again. And the bond market's trying to tell us, stop doing this or it's going to be heading towards trouble. So I think as long as we kind of stay in this annoying range, it's just in coast mode. It's in we're not quite stalling yet, but I don't know. There's a lot of uncertainty, and that's really the reality. So that is why even on a dip, I'm not just buying the dip. On a dip, I'm going to position for options, give myself a wide margin for error, and plan on making some income. Income for me is fine in 2025. I've made lots of income in 2025. I want to make more income in 2025. Okay. I'm running out of trades because the upside from April's low, I think a lot of these have been achieved. When you've got triple digit upsides from April lows, I don't get that excited about a stock that, like, how much higher does it go? Right? AVGO up 100%, Nvidia up 100%, stocks up 70, 80, 90, 100 plus percent. How much higher do those go? As opposed to the stocks that have gone up maybe 20%, 30% from the lows. Do they have more to catch up? Maybe that's a rotation. So there's possible rotations coming in 2025. I just don't know if they're going to continue to rotate into, let's say cheaper, more value driven tech, or if it's going to be more of the defensive sector because that type of uncertainty is still high. So we'll find out. Like, time will tell. Just not easy, So it's trader stuff. All right, let's keep going. I've got about 7 or 8 minutes where I have to go. Okay, so we did gold, Bitcoins. We did gold, silver, Bitcoin, talk bonds, get some Mag 7s in here. Let's get some currencies in. Currencies, let's go China for a second. HSI, pulling back a little bit just off of these recent highs. QQQ still have a ways to go. Alibaba had a nice little pop this week. That's actually a great push up towards 117. Baidu, look at this freaking stock, man. Gosh, this stock can't catch a break. Stock's up to $94, back down to $86 in 2 days. That is so much volatility on this stupid stock. Good Lord. I mean, I took a credit spread. I'm not doing anything else. I'm just hanging on to some shares. This is exhausting to watch. It really is. And I don't know if this is more trade war stuff. Like, why is it down? Let's see here. Asian equities trading in the U.S. ADRs drop Wednesday's trading. Baidu's maintained a buy by Jefferies. Shares rise. Uber partnership. I mean, that's what I saw. It's like they're going to introduce like robo taxis into Baidu, robo taxis into Uber. I'm hoping Lyft sees the same thing, but it's just not, like, nothing sticks. Uber's down off the highs. Lyft had some excitement up to 1750. Now it's down to 14. I do have to take some profit on my Lyft calls. I could probably get out of those. I need some more. My break even. I mean, I don't know. I might just. I hate to do it. I'm going to see what type of extrinsic value I can get out of it, but I might just take the profit. I'll look at my break even on Uber or on Lyft. I'm going to go LYFT break even. Okay. I might just do like a 15 or 16, and if it doesn't hit, I'll just pull in that credit. That probably wouldn't be terrible. Let me look and see what my break even is right now. So I bought some shares. Break even's 1204. 1204. So I can do some work on Lyft. Covered call wouldn't be that bad. So right here for the 18th, I mean, I could sell. Are you kidding me, dude? I guess it's only a few days away. Let me go out to next week. It's kind of bogus trading at 1487. I mean, the premiums are just not that great, unfortunately. But if I get it called away at 15, that's still making about $3.30 a share. That's not awful. I have like 1,000 shares. So what initially was like, hey man, I'm up like 10 grand on Lyft is now, faded a little bit from the couple dollar retracement. But maybe towards August 1st, earnings on the 6th. This is a pre-run. Not bad. I could probably get $15. I think I'm gonna do this. August 1st. Expiration 15 cover call, and try to grab like 46 cents credit. So that brings my cost basis down to about $11.60. So 11.60, get it called away at 15. If it gets called away at 15, that's fine. I make $3.40 a share. I'll make some money on it. Doesn't have to be awesome, but yeah. And if I want to, I can roll it again. But I don't really want. If I can get out of the trade prior to earnings, I'm actually fine doing that. And watch earnings be like, boom, it rips up to the upside. So we'll see. I think I'll get out during earnings, then maybe just add protection. I don't know. It's in the pulver alerts. I'll figure out what I want to do with it. So, all right, I got to go here in just a couple of minutes. Sector-wise, let's take a look here at performance. I thought this is interesting for 2025. Let's go year to date. Okay. So S&P is hanging out about 6% for the year. Communication services mainly led by what? Is this Meta? Netflix? Okay, so what's your big weighting here? Meta, Google, Netflix. That is why the sector's up 9.48% because of those three stocks. You have discretionary down for the year, staples flat, energy now flat. A lot of volatility after the Middle East disruption and prices have been all over the place. Financials, pretty steady. They pulled back a little bit off these recent highs. Industrials crushing it this year, actually. What's leading the way for industrials? Weight-wise, GE Aerospace, RTX, you got some of the aerospace and defense. Uber somehow is in the same mix as Caterpillar, Boeing, and defense and aerospace plays. But interesting weighting. Like this thing's up, 59%. So just with that weighting, it's just a lot. On industrial holdings is getting a lot of like the defensive love right now, which is kind of interesting. That's the leading sector this year. Technology has made a hell of a comeback in 2025 from one of the worst sectors and one of the most beat up sectors through March and April into now, one of the leading sectors as well. So incredible resiliency, obviously led by, AI hype, hope, optimism, better margins, and no jobs. Like they're not hiring anybody. Tech is not hiring, unfortunately. Who are the big holdings? NVIDIA. If you put 16% of your portfolio or your sector in NVIDIA and it's up 100%, you're going to have a pretty good sector. Microsoft, from the April lows. Apple, okay, fine. But just NVIDIA, Microsoft alone, I mean, you're talking two of the three largest companies in the world with almost 30% of the sector being weighted. So obviously that performance has been pretty good. Palantir's up there as well with one of the bigger rips this year. Oracle, Cisco, some old school legacy tech, Broadcom up 100+% from the April lows. Just crazy stuff. So yeah, just an interesting snapshot of what's kind of leading the way this year. I wonder if tech continues to climb. I think in order for us to have tech climb and lead the way, we still have to have a healthy bull market. If we start to see more industrials, materials, utilities, by the way, aren't bad this year either. It's just not your typical growth bull market. You've got tech resiliency and you got tech hype, but a lot of the growth this year that's been steady has been industrials, utilities, materials. Crazy. So, all right, currency wise, I've got like 1 minute. So I'm just going to go currency snapshot here. Japanese yen getting stronger, dollar taking a dip. Do we have news? No, we just took a big dip here the last 10 minutes. So dollar taking a nosedive, Japanese yen up, Swiss and New Zealand still at the bottom. Let's take a look at the DXY really quickly before we go. Yeah, a little bit of a quick move on the dollar. Let's look at the last 15 minutes. Not sure what that is, but that's a big move on the dollar. Is there some announcement? Oil inventory, no, not really. Just a big candle. So keep an eye on it. All right, I'm going to bounce. Like I said, hard stop, so I got to go. Let's go back and do this again tomorrow. And we're looking to maybe break this intraday floor at 62.40, which is why I didn't want to call the level here. So I got out with my SPX trade this morning for profit. Good. Now if the market gets some flow for the day, do we end up selling off towards 62? This to me is open space. I don't think we will make a big move. That'd be 2 days in a row, but you never know. So I'm just going to wait and see. I will be looking to maybe catch a floor down here around 6,200 if we get there. Okay, but if we just still hold 62.40, bounce here, like this might be a big fake out trade where the market goes, pokes, and then goes back up. So just watch this intermediate floor. If we break below it, there's room to drop to 62. If we break below 62, there's room to 6,000. 6,300 continues to be resistance for right now. Just keep that in mind. Okay, come on, man. I don't think skyrocketing is really the word, but it's probably moving, right? Look at a daily chart. That's not skyrocketing. I'm sorry. That's just gold has turned green. And it's probably because the dollar turned red. To the moon. That's right. All right, I'm going to let you go. Come back and do it again tomorrow. See you, bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.